It is Wednesday, May 3rd, 2023, and it is Fed Decision Day. Well, first of all, this is Red Ben Trader. If you want to get a hold of me on Twitter, it's at Red Ben Trader. If you want to learn more about the algo that we're using, or join us, or potentially join us in the futures trading room with my coach Simon, you can give him an email. It's trade the letter N word perform at gmail.com. If you mention that you heard about the room through me, you can get a 5-day free pass. Just let Simon know that I promised you one. We are looking for just a few traders that are preferably already trading futures, but want to improve their win rate and consistency. So if you think that might be you and you want to check out the room, give him an email. But do realize there is a monthly cost associated with it. You can talk to Simon about all that, and that's all the marketing I will be doing today. So I'm looking at NQ. Let me just erase some of these lines because I'm not using them at the moment. I wanted to talk about one thing in particular, but I can also go over some of the things I was trying to review in my journal yesterday, my live journal. Excuse me, unfortunately did not save appropriately. So I'm hoping this one will work correctly. If people want to put in the chat that you can hear me, feel free. If you're watching this live, if you're watching this later, then it must have worked because I'll only leave it up if it actually works. So these are all NASDAQ. This is all NQ. It's just, these are basically, you can think about them as different time frames. So lately, because NQ has been so tight, range-wise, Ronan says hello. He hears me talking and I think he figures I'm calling him. He's a smart cat, but not that smart. Hasn't quite mastered the language yet. So these are Renko charts, but they're of different lengths. So the ranges, what it takes to print a new Renko bar, is different for all three of these charts. I've actually got a fourth one over here that I just don't use very often, but it's there. And the reason I have more than one Renko chart up is the same reason that you look at multiple time frames when you're trading with, or when you're looking at a candlestick chart. Since we've been so tight, the range has been so tight on NQ lately, for like the last, I don't know, ever since we were in this range, basically. So the last couple weeks, last month, I guess. Let's see. The 15 tick has been the only chart that I can it's the fastest chart, because remember, the smaller these are, the faster they print, but it's the fastest chart that I can process and make decisions off of, from the charts that I look at. That's the easiest way to say it. That's how I decide which time frame to use, is whether or not I can process the information as it's trading live. So you can see here, the market's not trading fast. Now, when the Fed decision comes out, first of all, I don't trade that like garbage. Like when the Fed decision comes out, things are going to be moving around so fast. There's no way you'd be able to process this, because it'll print like 4 or 5 bars on this time frame, like in a moment, right? It'll just be like do. It'll look like the 8 tick. If you watch, this is the 8 tick. And I mean, at this point, we're going slow enough that you can almost process this. But what you'll see is when the moves actually occur, like there'll be nothing. And then when the move actually occurs, it'll be like print bar, print bar, print bar. And so you wouldn't have even had any chance to do anything. Like by the time you see that there's a pattern, like see that? I was just like boom, 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 right? Like if your pattern was sell a close underneath a plus sign or something, or by the time you hit the button, like you missed your entry, right? So that's how it works when you're trading when you're trying to trade a time frame that's too small for the conditions. Um, and that's how the 15 tick used to be. But it used to look a lot like this. But lately, it's been slow enough and tight enough that the 15 tick I've been able to process the 15 tick whereas I'm usually when NQ is moving as it usually is, the 24 tick is as fast as I can process. Some people still have a hard time with the 15 tick because it is a little bit faster, especially if it's not real tight. And if that's the case, you just move up to like a 24 or a 20, right? Something in between. There really is no magic to like the length of the Renko bar. It has to do, like I said, you just want to go the smaller you go, the smaller your stops will be. But the smaller you go, the bigger the chance that you miss entries due to like illiquidity. So you have to find some sort of balance there. And yeah, for me right now, that's the 15 tick. But that being said, only looking at one time frame is going to hugely limit your win rate, is what I've learned. And this is the case for a candlestick chart as well as a Renko chart. So, for instance, on the candle chart, if we look at a 3-minute, right, and I don't consider any other time frames, I'm just looking at the 3-minute. If the market is stuck in a range where you'd be doing mean reversion trading, you'd probably survive this, right? But if instead you looked at this like a breakout here and bought that, you'd get crushed, right? This was your level and you saw the breakdown at open and you sold it, you'd get crushed. And so you have to have a way to know, should I be looking at trading the edges and back to the middle like a mean reversion strategy, or should I be momentum trading and looking for breakouts or pullbacks, right? Well, the way you do that, in my opinion, primarily, is by looking to the left. And you see what the chart's been doing recently and where it's been doing it. So, for instance, if you look to the left, we've been slow and choppy, right? Slow and choppy, slow and choppy. Why am I not getting... There we go. Wow. Really laggy. I don't know. There we go. And then yesterday, this is overnight, right? On the 3-minute. Slow and choppy, grind higher or sideways, right? So just from a 3-minute, if you move far enough away. But if you're only looking at today's price action, right here on the 3-minute, you wouldn't know that like there's a little bit of a bullish tilt to this, and you also wouldn't be confident most likely that this is some sort of a major resistance unless you were using the voodoo range levels. So and like I said, if you're going to use the voodoo range levels there, that way you better hope it's mean reversion and not trending. So one way, rather than just looking to the left, a fast way to determine like what type of strategy you should be using, just go to a higher time frame. And now we look and we say, oh, okay, I see. Yesterday we dropped, and then we absorbed the selling and potentially trapped some shorts down here. When we lifted, they weren't able to take out that low overnight, and so we grinded higher. And now we're working out the high of yesterday, right? And now you start to see context as you go higher. And then let's say we go to the 2-hour. And we're like, okay, well, and from that 30-minute, it looks like bullish is probably going to be easier than bearish because sellers might be trapped at the lows, right? Well, then we look at the 2-hour and we see like maybe 4-day price action, right? The resistance is here. All the volume came in here. Why? Because the resistance candle had such a big wick that it closed all the way back towards this one. And that's why it had an immediate pullback here. And so it needed a lot of energy to push through this pullback, that range, required a lot of energy, and it tried to make it up here, but it needed to pull back. It didn't have enough energy to immediately continue, right? We try to trade lower, but we close bullish. That doji candle in this context is very bullish because we're approaching this resistance. It makes sense to have a little bit of indecision here, but we're not breaching any lows, so there's no reason to think anything's changed. But then you look at volume, it's like, oh, it's really low. Isn't that bearish? No, because it's an indecision candle. It should be low volume. That makes sense. Like there's less participation here than there was in this bigger candle that covered this higher volume area. Because this produces volume, right? I know this volume doesn't look like much, but if you draw the volume profile, eventually you just learn to see these things without drawing it, but if you're not on the internet. Let me see, hold on real quick, guys. Let me just make sure I'm still recording. Oh, did it lose it? I might have lost it. Let me see, hold on real quick, guys. Oh, maybe we are good. Cool, all right. Well, like I said, you might be getting choppy, and I apologize for that, but I just don't want to keep. Yeah, last night I did like an hour and a half session with. Let's see, how can I go live? Session with. There we go. Okay, it is working. Wonderful. All right. So, yeah, if you here now we finally got the volume profile. So you can see this is the volume profile, and if you look at where the value area is, this is the value area high. This is the value area low. The pink is the point of control. And it's a B profile with all of the volume inside this consolidation, right? That makes sense. You can probably just see it eventually once you've drawn enough of these or looked at enough profile charts. So, okay. So when you look at that, it should make sense now why this is low volume, because you're leaving a high volume area going through single prints, right? It's the exact same as any other profile analysis. So then we get another move higher, right? And we get increasing volume. That's good for bulls. That's good. As of right now, I'm thinking we're going higher. You can see this resistance was breached, but we could not close above it. See that in this area here? Here, I'll show you. Pretty sure until here we could not close above it. But this was an overnight session, right? So in the day session where all the volume was, we could not close above it. Overnight we tested above it, but overnight there's less liquidity, so you can get these really big wicks. And that high was relevant, which is why I'm anchoring the fib there. And it's relevant based on, first of all, the time of day, but also the the location of it becomes relevant because it went beyond this and yet closed lower, and then we never made it back over it again, right? This high held the next day. This overnight high should have had liquidity behind it, and it should have been an easy target for bulls to take out if it was bullish. That's just the way the market usually works. It was weak. And if you look, we put a pretty poor high up here, but we couldn't bust through it. And then we took out this low and closed below it. So right there on Monday, we should have had kind of a sense that like, okay, this impulse that continued here, it's out of gas. It doesn't mean it's bearish. It just, on a higher time frame, it might still be bullish. But on this time frame, it's going to need a little bit of rest, right? So at that point, right here, we got to look back and say, well, where was all the volume during this period, right? And so you could draw it if you want, or you can just look here and you can see it was on this pullback here, right? Now, surprisingly, there's a fib that lines up right to that low, and that's probably why they got a little bounce there. And that's an area that bears need to attack, okay? Whether or not they're going to have success is going to depend on the higher time frame. Because to get success, They need higher time frame participants to come in there. So how would we know that it might succeed? Well, one obvious way is go to like the daily chart and say, well, where are sellers positioned right now? Well, you can see where they're positioned usually is at the highs, the resistance, right? So you can see it's basically here, here, right? So that's 13.3, 13.50. Like these two voodoo range levels up here, there's clearly sellers up there. These three, clearly sellers, because this was all, think about it. Someone sold here, right? They made money. The price came back to that level. What did they do? They sold again. Why? Because they like making money, and last time they made money. So they sell again. It goes even lower. Comes back to their level. Tests above it, or maybe up here. Steals some liquidity. Comes back to that same level that they've had success with repeatedly. What are they going to do? They're going to keep selling it, right? So if this time frame has resistance here, and the smaller time frame had a sign that they couldn't do something that they should have been able to do when it's bullish, well, those two things together mean not only are we probably neutral, but if we break this low with gusto, it's bearish, right? Well, it does. Break it with a bunch of volume and a lot of momentum, right? And then we consolidate throughout the rest of the day. We raise up overnight. And remember, on the 3-minute, this looked very bullish, right? Well, on the 2-hour, we can go over here and say, well, this was resistance from yesterday. Whoever sold here potentially made money, right? Now we've come back to that area. Is that resistance? Yeah, it's resistance. It's resistance until it's not resistance, right? But look at this. We've closed a 2-hour candle above that resistance, right? Now, that doesn't necessarily mean it has to go higher. But it does say that there are participants trying to get us to go higher, right? It doesn't mean it's going to work, but they are making an attempt here. So what has to happen for them to be successful? They need to hold a low. Because if it's bullish, you're going to get higher highs and higher lows, right? So this is a higher high. So what they would now need is a higher low. And for me, it would be a higher low than this overnight low. 13.158, let's say. Really does need to hold now that we've made a higher high on this 2-hour time frame. But keep in mind, the daily time frame did not make a higher high, right? The daily time frame made a lower high and a lower low. So if you're bullish, you're working against that higher time frame momentum, and that's almost always a problem. Unless you're trading for 10 to 20 points, that's almost always going to create issues. So if you're trying to swing trade against the higher time frame, just stop doing that. Or at least have very clear rules for when you should and shouldn't, and those rules need to be logical. But instead, if you do want to go bullish here for one reason or another, you're like, look, I think this is bullish. Well, the only reason that you could have that feeling is, or that sentiment, is if you were looking at a higher time frame than the 2-hour, right? So if you look at a much higher time frame than this, for instance, like the weekly chart, right? And you are literally like trading once every few weeks, maybe contributing to a longer like core position, right? Well, this looks relatively bullish, right? High, low, can't see that, sorry. Low, higher high, higher high. We just need to keep putting in higher lows. And the weekly chart looks pretty good, right? You can see this high, or sorry, here's all the volume on this one. See that? That's where the big volume is on this contract. Here, we traded above that with the indecision candle. Makes sense that that'd be lower volume. Then we broke out over this resistance, but we had lower volume still. That breakout, having low volume, meant that we were needing a pullback, right? We get indecision. This low holding means they're still bullish. In fact, this low could even be tested a little bit. As long as they defend these, we're good. They come down, they don't even get to it. They get back into this area, and they find buyers immediately. But look, they have not yet breached this high and closed a week above it. So if this week closes above this, the only explanation is that it's a bullish trend, right? If this week goes no higher and we close red, well, then this area is still getting re-auctioned, right? We're still working through this, and that would continue to be the case until we broke below and closed below a low. So see how these wicks, we haven't closed below any of them. So there's really nothing bearish about this weekly chart, in my opinion. There's just nothing bearish about it. On the monthly chart, it's bearish, right? And you can see that there is some resistance. Here, let me turn off the voodoo range levels. They're not very useful in this time frame. You can see that we have some resistance here. So it makes sense to stall if it's bullish. But on the higher time frame than that, we were making lower highs and lower lows. And this could just be another lower high, right? So when it comes to like very high time frame trading, like once maybe you're contributing to your 401k, we're at resistance in a bear trend, right? Oh shit, what'd I do? Can I undo that like this? There we go. We're at resistance in a bear trend on the monthly chart, but on pretty much everything in between that and the 3 minute, or the 30 minute, I mean, it looks bullish. The trouble is on the 2 hour and 30 minute, like I just showed, we've broken underneath these and trading lower. So where I was getting with this, kind of a tangent, but where I was getting with this is that you need to look at multiple time frames before you really make a decision on whether or not you should be trading momentum or mean reversion. Because even if you're looking at candlestick charts, if I was, again, only looking at 3 minute charts, I'd have no clue here whether or not I should be selling breakdowns, buying breakouts, or just trading the range. It would be very difficult to be consistently right without having a sense of what's going on to my left and whether or not higher time frame traders in my direction are having any success, as well as if any higher time frame traders are looking in the opposite direction, are waiting to participate in this location, right? So Simon, my coach, talks about this quite a bit, that we need to pick our locations very carefully, and a very easy way to do that is to limit your trades to locations that have already had some sort of a reaction. So an easy way, like a simple way to do this, even without the algo, is to think about like where the swing highs and swing lows are on the higher time frames. And for instance, like this was clearly an important level, right? Up here at 13,221 was clearly an important level at that point. So when you see them reject out of it, if you're already looking for an opportunity to get short, that is probably your best location. And then if you're looking for an opportunity to get long, you probably want to wait until this swing low gets tested, and then see if they can reclaim it. And then on this time frame, there's a relatively high likelihood that you're going to go back to resistance, and that this could be the start of even a new trend on a smaller time frame. So And like I said, you can do that with any one of these on any time frame. So it's just the higher time frame you go, the more consistent you're going to be, right? And it kind of goes counterintuitive to what a lot of people think. A lot of people think like, I'm not bullish unless I can break above this. Well, if you buy that, you're going to get totally reamed, especially in futures, because in equity futures, it likes to swing back and forth. Even in a trend, it's going to be hard to guess which level is the breakout that matters and whether or not it's the first one, the second one, the third one, or the fourth one. So instead of buying the breakout, what Simon suggests is, well, first of all, if you're going to momentum trade and buy the breakout, only do it when there's strong momentum and when there's clearly a trend. But then also, since you're entering aggressively, exit aggressively. Take your profit aggressively, and if you want to hold a runner, make sure it's a very small, like, percentage of your total trade, such as getting in with 3 contracts, taking 2 contracts out at 20 points, and leaving 1 runner to see if you can get 50 points. That makes sense. Taking one contract at 20 points and waiting with the other 2 runners to try to get 50 and 100 points is not going to work very often. The only time that's going to work is when you nail the breakout, right? And the problem is every time you don't nail the breakout, you are losing 20 points on 2 contracts, even if you made the 20 points on 1 contract, so it's technically a losing proposition. So you really have to think about these things before. Every trade needs to have a process for how you enter, and that process needs to involve some sort of risk mitigation, risk management. So here's a real obvious one. Look. So let's say you looked at this and you're like, I don't think this is bearish, which is, I mean, I see that, right? It's like, I only need 20 points. I don't think this is bearish, and that's fine. If you're trading like the 3-minute chart, here, you might see it. You'd say, hey, I don't think this is that bearish. It looks pretty neutral to me, right? We've already made a higher high. Like, I just want to get long. Well, go to a higher time frame than what the one you're trading at. Find a low and make sure that we've taken the liquidity out below it. So here's the low a day. Have we taken liquidity out from below a day? Yes. What about overnight? No. Right? None of these got taken out. Well, this one did. But like this important one, it's the London low, not taken out. So if your plan is try to get 20 points, looking at the algo right now, it would make sense to take a trade to the long side here because we've already traded underneath the daily low, which was right here. So here's on the algo. This is the 40 tick. That was the low. We traded below it. What do I need to happen now to be able to get into a trade? I need a setup on the trade, on the time comfortable trading. So my setup in this case would be a trap back in, meaning we traded underneath a low with a little flag on it, a little apex on it, and we closed bullish. And so that would be a reasonable trade to take. It doesn't always work, but that would be a reasonable trade to take. And then I would be hunting for 10 to 20 points, and that's it, right? If I can get back up to 200, it's a winner. Otherwise, my stop would go below this bar here. And like I said, that trade, well, it won't work every time. It's going to work way more often than just taking every single green algo or every single diamond algo or every single arrow algo. All of these things are suggesting that it's bullish, but if the location is not aligned, you might not have any support from higher time frame traders to help you push to your target. Okay, almost. There we go. So target met, right? And right there, I mean, I realize that that's only 10 points or maybe 12 points, but realize that like with 3 contracts, like, you know, if you exited 2 contracts there, and then you maybe keep a runner if you think that it might go higher, because it could. Um, with 2 contracts, you're with every contract it's $20 for every point, right? So you're talking $200 per contract already banked just from that 10-point move, right? So if you're trading 3 contracts and you sold 2 of them, you're up $400 and you still have a runner with your stop down here. And the most you're risking is to lose $200. So because now you only have 1 contract left. I mean, if you would have been wrong, you'd lose 600, right? But because of 20 times 3. But at this point, once you've taken that first profit at 10 points or 12 points or whatever, you're like I'm now risking 20 points with the potential of like an infinite level of gains, really. I mean, realistically, it's probably 30 to 50 points, or at best, like basically back to the highs of day would be my like primary objective with that runner. But one way or another, the way I look at it is I've already, even if that runner doesn't play out at all and I get 0 on that runner, I've already banked $200 because I've actually made 400, but that last runner I've got a remaining risk of $200. So you do kind of have to understand that math, but it's basic like bet based math. Like if you know the book by Annie Duke, Thinking in Bets. If you don't know that book, I should say it's a great way to like think about mindset and how to like use math in your decision making, and it applies to trading beautifully. So let's just see what happens here with the runner. Like I said, sometimes it's going to go 50 points. Sometimes it's just going to stop. But the important thing is to remember that you've already banked $400, or you've already taken profit in $400. So even if it stops out, you're still green on the trade, which is like psychologically a very important thing for a lot of people to to have in their process. Now, a lot of people ask, like, when it pulls back, shouldn't I add to my level? And in our method, it's only acceptable in certain situations. There are situations where you can add when it comes back to your entry or further than your entry towards the stop. But generally, you want that to happen before you took that first profit. Once you've gotten that first profit off, that 10 to 12 point extension, it's usually not a great sign if price comes all the way back into here. Typically, if you're planning on holding runners because you think it's going higher, you want to see a higher low here. And it might be at your entry, but it might not be. And so having a process of just adding when they pull back into your entry, in my opinion, it's not going to be right often enough to like multiply your size. So it's not worth it to me. But remember, this trade, even if this stops out, because I've already made 10 points on the trade, the important thing is to understand that this is an example of a trade that like you'd want to be participating in my opinion. Like, I want to take the trades that consistently, not every time, but consistently give me that 10 to 12 points. So let me show you how the trap back in setup, where you have an apex, you trade under the apex and you close bullish. Look how sometimes those fail. Watch. Okay, this one worked. Apex, come back into the apex. Worked for 10 points plus, right? This one. Right here, the first one, the star, would have failed. And then this one, if you tried again, would work. Okay, that's pretty typical. This one worked. Okay, so we're at like maybe 70% accuracy just on the day. And then this one, entry here, stop here, and that works, right? So then overnight, didn't try, this one worked. If I'm skipping some, it's on accident. This one failed. Right? This one didn't quite set up that way. And that's Europe. So I'm probably not trading Asia, but if you were, it's got to have a little flag on it for it to count. Here, this one worked. Worked, right? And I'm just looking long right now, but it does set up short too. And then we're back to yesterday. So like we had a couple stops, but they mostly worked. And it's a very high odds setup to the long side. To the short side, they don't work as often, particularly when you were grinding higher. So look, if you were trading in the wrong direction, get an apex, close, get behind the apex, close back into it, that's a stop, right? Apex, close, get behind the apex, one bar closes back into it, that's a stop. Apex, right here, get behind it, close back into it, that's a stop. Apex, close behind it, get back into it, that might have made 10 points. And then apex, get behind it, first bar closes back inside the range, big, you know, make as much as you lost. But what I'm, so what that should show you is that when you got direction correct, the apex trap is a really, it's a very good trade. When you have direction incorrect, it's a very dangerous trade. It will work once, basically, when the market's ready to switch sides. Once it works, so once this gets an extension, now they start to work. Apex, get behind an apex. This one, it's close whether or not you got 10 points there. I could measure it. Let's not worry about it right now. No setup. Does this one trap? It's got to be on one bar back in. Yes. So this fails. Why does it fail? Because we're making higher highs and higher lows. Right? It's bullish now. So if you can't tell that, you take a stop. But the easy way to tell that is you've got a little head and shoulders here. You've gotten over an apex and closed above it, meaning we're in supernova, is what Simon calls it. And you've made a higher low and a higher high. And if you still can't tell, once this stops out and it can't even produce a triangle after it, because usually these orange bars, that's a point of control shift. So you're shifting volume down all of a sudden. If someone's attacking this price range, yet they can't even get another bar below it. They can't even get 15 ticks below that before buyers come back in and close it higher. It's not bearish, right? Now, it doesn't mean it can't go a little bit lower, but it's not time to turn the entire chart. It's not just going to flip over, right? So that is actually a buy. And this is where people get confused, I think, is they're like, I missed this little move, so it must be bearish. No, you're going to miss all sorts of stuff, but you want to have the higher odds trades. So don't worry about missing this. Think about where are we on a higher time frame? What direction are we going? And it's bullish, so this is the trap back in you want, right? Not this. That's not the short. Because we have no evidence that shorts are having any success. And every time they do have some success, it sets up bullish and works. And making higher highs, higher lows, it's not happening, right? And then we make like a double top. That one finally has success. Again, one of them is always going to work, right? When it switches. That one finally has success. Now we can probably consider looking for trap back in on the sell side. This one didn't get an apex, but it's the same concept. and you got orange bar, star, diamond, followed by triangle down. So a big aggressive push here, and then follow through aggression. So if this apex drops here, should I take this? Yeah, in my opinion, yeah. You've had success shorting. Now you've had a higher high and a higher low, so it might not work. But if you're gonna do it, this is where you do it. Yeah. If you're gonna play with fire and trade against this time frame's trend, do it when the higher time frame is having success in that direction. But then when you get an apex trap to the upside and it works, right? And especially if you get a stop on the short side, but you might want to skip this one. Okay, it works, so we can keep going, right? So, and the only reason I say skip this one is, like I said, we've now made multiple highs and multiple higher lows, and trap back in to the upside is clearly working. So the only way this is going to work short is if this is the end of this tiny little uptrend, and in this case it is. But like I said, if you're going to skip one, skip the dangerous one. So here it sets up bullish, works again. So I'm still thinking, you know what, it's probably bullish because none of the long stop trap back ins have been failing. Here, apex, should we short this? Like, why? All the longs are working. In my opinion, like, you don't need to. Can you? Yes, but you don't need to because the longs are working. And then that's where we are right now. Right? So now if it's hard to see like the bigger time frame, one thing I've done is I'm putting, like I said, multiple time frames on the chart on the screen at once. So I've got the 15 tick that I'm primarily trading. I'm also watching the 24 tick because that's like a very reliable and tradable chart to watch. And if it sets up here, I can take trades on it. But there's going to be more opportunity on the smaller one. And then, like I said, I'm keeping my eye on the 8 tick occasionally because sometimes it gives me some hints as to like what direction. Because if the 8 tick is clearly bearish and the 15 tick is clearly bearish, your bear trades are going to work better. But what I've been starting to do is also keep the 40 tick and or the 80 tick, depending on how fast we're going, on the screen. And the reason is that in a blink of an eye, I can see where we are compared to the previous high and previous low. So like here, you can see our overnight high here. We tested above it, and they sold it. And they sold it with a star. See the star? Right here. And that star, the bar that the star was on, it crosses this blue line, this Keltner channel. It crosses up here. Just like this one did. The higher the time frame that you're trading, the more relevant all of these algo signals are, because remember, they're all information. It's just reading the footprint and giving me a visual representation of what's on the footprint. So if I see that stars occasionally give me drops, if they print up here above the channel like this, I'm not worried about this one because it's not even, this one's kind of like, it's suspicious, right? This one's kind of sus. This one is in the right place, right? And if this occasionally works all by itself on the 15, where are the lines? There we go. Okay. Okay, so this one touched the channel, right? But it's a really big bar, and you're kind of close to support already, so it's a little bit suspicious. But this is an example of one that might not work on the 24 tick. And then if you look at the 40 tick in the same area, this star that went beyond the channel, it did give you a little bit of an extension. And remember, the 24 tick here, if you got in somewhere around 201, this goes to like 87. So we're talking at least 10 points, if not more. And if I go back to that area where that star is, what you're going to see is on the 15 tick, if I saw that star prints at 202. Okay, so it prints, by the time this bar prints, I know that star is there, right? It's already there. And so here, if I saw this, and I saw this star, I could think, okay, I know I usually get some kind of a drop here. So if I can get set up for a short, this is probably a good opportunity. So now I'm looking for a pullback and a sign of aggression to the sell side, like a yellow dot. Right? Now this one didn't give you much because that yellow dot is not a very good, not a very strong signal on its own, and it's at the bottom of the channel. So a much better way to trade it is see the star here at the top of the channel. Now wait for us to get back up to at least the midpoint of the channel, if not the high of the channel, and then look for the sell right there. So here, this diamond and orange bar, considering the fact that we have a star on the higher time frame, we've got a pullback on the smaller time frame, now, and then we've got an aggressive trader going in here. That is a much better trade signal to the short side. And chances are that is going to work a lot. Now, put that together with what I was talking about on the candlestick chart, where I say, for instance, I only want to participate short if I'm at an area of high liquidity, right? Or I only want to participate long if I'm under an area that was a low. So like I said before, like if this was an important spot, which I think it is. Make sure you can see. So this is the London low. So if I think it's bullish, the best place to long would be after a test below this, which just happened, followed by a sign of aggression. So let's go to the end. Have we, on the 40 tick, have we had a sign of aggression to the upside? No. Everything's to the downside, right? We had a star, and it's gotten continuation. So on the 40 tick, there's nothing to do. Bullish, right? Even though we've traded underneath that level, there's no sign of strength on the bull side. Okay, so that's the first observation. We also have not quite reached this lower Keltner channel. So, but we're getting close to it. So what I'd prefer is we go just a little bit lower and then like print a star or something, right? On the higher time, on the lower time frame, then we zoom in and we can see, not surprisingly, this trap back in, it just failed, right? It stopped out, and that should make sense because the higher time frame isn't bullish, right? We have a bearish setup here on the 40 tick, so it shouldn't shock us that the bullish trade on the 15 tick is not going to work 100% of the time or anywhere near it, because if the 40 tick is bearish, we know that those trap back ins will often fail. But we looked at the 15 tick and we said, hey, if the much bigger time frame, like the 80 tick, for instance, if this is bullish and we're making higher highs and higher lows, well, we know based on the candlestick chart that this would be a great spot to catch along if it sets up. Hopefully, I know it's kind of confusing, but the basic idea is, if I know I want to get, you can start at the higher time frame. You can say, I know if it gets down here that I'd be willing to take along. I just need the setup to be valid, right? So you don't just want to immediately jump to the 15 tick once we've hit that level and take the first algo to the upside. In my opinion, that's too aggressive. In my opinion. Like, even though on the higher time frame we did trade under that important level at 78.25. Here, I'll put it here too. So 78.25 is the overnight low. Actually, it's not the overnight low. It's just the London low. Because the pukey color on the background is the overnight range, because overnight is kind of like shitty time frames, or it's a shitty time frame to trade. So generally, I consider it like not as useful. Now, to be honest, Europe is a great time to trade, but especially like the Asia session is usually not so great. But this was the green line here was the European low. It was lower than that in Asia, but it was as low as they could get during London. So testing just a little bit under that, preferably just a tad more, and then bouncing with an aggressive trader pushing us up would be something I would be willing to participate in. So, but like I said, I need to reach that level first. And then what I'd really like is for this 40 tick to set up. And then the next pullback on the 15 tick that gets an aggressive sign, I can buy. Because like I said, I just demonstrated that even with just the trap back in, and the truth is it's the same for a lot of my trade setups, or a lot of our trade setups. As soon as you got direction right, they start to work abundantly, let's say. But when you have direction wrong, they're going to stop often. So a huge part of trading is just knowing, is this an area that I even want to be looking for along? And then is the chart ready to push higher? Like, because you could be at the area. Oh, I might get my setup here. You could be at the area. I need a triangle up, and then 91.50, I can get long. If it hits 91.75, 91.50, 91.75, one tick above, I can buy it on either then or any pullback. And then the stop goes at below the low. But only if I get a triangle. I'm not long yet. So the stop would be like 76 if it turns a triangle here. I will take that in two different accounts. Okay, I'll take this in both accounts if it goes. Because that's a pretty good setup. Now, the 40 tick has not yet confirmed, right? So it's aggressive. But sometimes you got to be aggressive if you want to catch these edges. And that's a stylistic decision. If you're not tilted by missing the first impulse move, which is a great trait if you can avoid getting tilted, and instead you like to trade momentum rather than like attack the reversal and eventually get it and then hold and like carefree like trade for the rest of the move. Instead, if you do better missing out on all those stops trying to get the reversal, but then also usually missing the actual reversal, and then as soon as you see that work, you know that the longs now are going to have a higher expectancy, so you're just going to attack relentlessly. That's fine. A lot of people in the room do it that way, and a lot of the very successful people in the room do it that way. So there's nothing wrong with that. But the easy way to do that is just to wait for the 40 tick to confirm. So since now, like I said, I would have preferred that we actually trade lower first. So this might not set up. And if it does set up, that would be a reason why it might fail. It's also messing around with this voodoo range level. And sometimes those can act as resistance. But it hasn't yet acted as resistance. So I'm not going to worry about that right now. But if it does act as resistance here, it might create problems for the longs in the future. If it acts as resistance here, I'm not going to get triggered long. So I'm not going to worry about it. Because for me to get triggered long, we have to get to 91.50 before we get to 80. If this trades 80, I'm canceling if it trades below 80, I'm canceling the orders. Because the setup needs to have a triangle come right after that ring. And the green bar with the blue dot is very, very, very dangerous. But it's the second one, so it's a little better. But this combo of blue dot and green bar, it's very rare that produces an immediate lift. Because what it's saying is volume is shifting up, but there also is delta divergence. So there's a bunch of sellers in that bar, yet volume shifted up. They need continuation for that to work. So if we get the triangle, it's great. If we don't get the triangle, it's nothing. They need that continuation of aggression. And if that triangle disappears, which can happen until they close the bar. If the bar closes and that triangle's not there, I need to immediately exit. Okay, bar closed, that triangle's still there, so I should be long, and I am long. So I'm trying to get 10 points, and then I will hold a runner. I did this with 2 contracts on two different accounts. So I spread my risk out a little bit. So it's technically I'm potentially getting 4 contracts of risk, but it's across 2 accounts. So if I do 1 account, I usually do 3 contracts, and when I do it with both accounts, I do it with 4 contracts. Well, 2 each. And like I said, my stop has to stay down below that low. So it's got to be below 78.25. Because we could come all the way back in here and still bounce. And it could stop, right? It may stop. But the potential is for a relatively strong lift here. So I'm willing to take the risk. I would like to see this close bullish. So 98.75 would be a big help. And I will end up if we get up there, and then I'm more willing to hold that runner. If I see some sort of sign of aggression on that bar. So we'll see when it closes. Right now, this star down is not valid unless we close it bearish. What you'll see is if it closes bullish, that star is going to disappear. While the bar is still active, it's still live, those algo signals are not reliable. But once it closes, they are. So once it closes, whatever's there is going to be there. But while it's building, it's just giving us the potential for a star. But we don't really know what it's going to be. And like I said, the star down can only happen on a down bar. I just know that that's one of the conditions that's required. Is it has to be.
Don't Start Now and Summer Songs on Amazon Music.
Alexa, go home. I didn't. Okay. Alexa, stop. Stop. All right. The risks of having AI in our life, right? So, like I said, I'm not exiting this trade unless we take out this low. But I will take profits if we get to we got the big figure there. So if we breach the big figure, I will go ahead and take half of this off. A lot of times they like to come up, tap like 202 right here, where that VPOC was, before it shifted down, and then they find sellers and they reverse. So I want to make sure that I get paid something, or at least limit my risk if that happens. But what I really want here, since I waited for that pullback, and that location is that what I really want here is continuation of like 40 points. So while I think it's prudent to take 10 points when you get it, because you don't, like, psychologically it's very difficult to hold that risk longer than that full risk. Whereas if you can get half of your risk off, it's a lot easier to hold that runner as long as you're supposed to. But if you're trading with a small enough size that it's not a big deal if you take a full stop, maybe you're up on the day, whatever, and you have a reason to think that this is, like I said, a relatively good place to be participating, and you're going in the direction that you think the market's going, I don't see anything wrong with holding the full position a little longer. And my coach Simon does that all the time. Not every time, but often. When he's confident about the direction and there's a reason to think that the location is accurate, it's not wrong to just hold the whole thing and try to get a push on a full position. But I would say this is a situation where that maybe is not what I would do. Because it's just very choppy being pre-FOMC, and I would say there's a higher likelihood that we mean revert or go neutral between 2 levels rather than trend. So for me, I'm actually more apt to take the whole thing at 10 points than I would be to hold the whole thing for 30. But that's conditional. It depends on the situation. Well, that's not good. We don't want to see that. So they gotta save this here. Otherwise, I'm gonna get a stop on both my contract, on both my It didn't quite reach 10 points, so I'm fully long at this point. And like I said, they do stop sometimes. I could have taken the trap back in on this bar, and then I would have gotten my 10 points off, but I waited for the triangle for confirmation. So my entry was higher, making my risk bigger, right? But I could have technically entered earlier. I just didn't like that this was a blue dot with a green background, because as you can see, they don't always work right away. But now that we've gotten the pullback, this should continue higher. If it doesn't, it's not bullish. And you got to accept when you're wrong, right? Like if it doesn't work, and there's a high expectancy that it's going to work, like either you're getting swept out and it's going to immediately reverse, which you always kind of have to be ready for and decide ahead of time what you're going to do with that. Or you just have to admit that, hey, I'm probably wrong here. And in this case, we didn't quite reach the blue line. So if I got swept out here, I would wait for the 40 tick to give me a sign of aggression to the upside, like a star up, and then look for the pullback on the 15 tick. That's how I would trade this personally. If I got stopped here, I wouldn't long unless I got something like that. I would be more conservative. Okay, so this is a good sign. We got a nice little pullback back into the range. I was negative on the trade, right? And this is why you don't move stop to break even. Like even if you would have gotten along here, it would have pulled through your entry only to continue, right? And that's very normal for ES and NQ. Very normal. CL2. So on the candlesticks, you can see we've got a fib that we're working through right here that's acting as resistance, which I was a little nervous about, but like you're always going to run into something. So we'll have to see what happens there. Yeah. All right, so like I said, I want to get a little bit above 200 and then take some profits. But if we get stuck at like 225, I will move those. I will get out of half this position because I don't want to get stuck at the big figure. But what I'd like to see is them take liquidity above it and then get out at like 01 or something. Only half, right? I'll hold half of it and get out of half of it. And that way my risk is significantly reduced. But it's very possible that this VPOC, the volume point of control from a time frame perspective was up here. So if I drew the volume profile, it's right here. See that? So that level I can extend, and it would be very normal for that to act as resistance. And that happens to line up almost exactly with the big figure, 13,200. So that should be a natural target. It's not always where the market stops moving, but it's a pretty pretty reliable place to look for some sort of reaction. Like what it's going to do there, no one knows. But once it gets there, we want to keep an eye on it and see what happens, because if they run into a bunch of sellers up there, it might not be ready yet to go higher. If we get above it and then come back and they like support the bid above 13,200, well, then I'm going to assume that any dip can be bought at that point. So again, I'm not moving my stop. This will either pay me or it'll stop me, because it's very normal for it to breathe in and out a bit in that zone, especially since it's not heavily trending. It's gonna wiggle, and you're gonna need to accept that, because we're waiting for confirmation that since I am following aggression into the market, it's going to be a very normal occurrence for the market to challenge that aggression. I don't really want to miss the trade if that challenge is immediately thwarted, but just realize that because we're using other traders' aggression as a signal to get in to follow him, because usually if someone's aggressive enough, they're going to continue to defend their position as well. But realize that the opposite side doesn't want to lose money, and they're going to fight that aggression as best they can. So it's very normal to have multiple tests below your entry if you are trading in a way that like waits for some sort of confirmation. That just realize that that's normal. So, and if you don't have a sense for that, you need to study it until it makes sense. Like, study it until you see it and it has no effect on you. Like, you need to go below your buy-in, your entry point, and you can there's no change in breathing, there's nothing, you know. Now, you might get upset or like stressed as it approaches your stop. That's pretty normal, right? But you still don't want to exit the trade. But I think the easiest place to make a mistake is to exit the trade when you're still profitable, but you haven't reached your target. Or maybe you're at break even, because psychologically you're going to make excuses. Okay, here's 200. Let me just see what happens here, because I might have to take one off just a little bit earlier than I want to. Yeah, see how they're like pumping it? They're like pump, pump, pump. They haven't tested above it yet. I want to just see them rip right through it. I'm just watching the DOM carefully. Okay, there it is again. There we go. Okay, I took it at 275 because they had trouble getting through it the first time. So now that they've stolen that liquidity, I want to go ahead and exit half of the position. Now, they could just scream right through it, and that's fine because I've still got a runner, right? That's why we have runners. But when I see it hit that level and have a little bit of struggle, and then it sweeps above it, I'm going to go ahead and get out of half. And that way, even if they put up a fight at like 03, 04, 05, and it goes all the way to my stop, my risk on it has been cut in half. Whereas now, if it continues higher, I'm still taking advantage of it. I'm still in the trade, right? But it's very hard to stay calm and on process, to stick with your strategy, if you saw it struggle in a spot that you expected them to struggle, and you didn't, and you don't have any way to reduce your risk. So remember, this is that VPOC from that earlier consolidation, right? On this, it's this, right? Here, I'll mark it off. This. The VPOC on all of that. All this consolidation. The VPOC is right here. That's where most of the volume was. So it's going to act like a magnet, and it's a really good target, but it could also act as resistance if they can't get volume above it. So I'm watching this yellow line, which is where most of the volume is within the range of the Renko bar, to see if they can get above it. Oops. On a bar that's not pink. So if this bar closes bullish, the VPOC right now is still under that line. So that would not qualify as breaching it unless they shift volume higher as they push the market higher. So right now, they have not developed volume above this time-based VPOC, previous time-based VPOC. It's not a daily VPOC, but I'm saying like it's the same concept, just like tweaked a bit so that it works with Renko. Whereas the yellow one is just the same math, but based on as if this entire range was an entire day. So like I said, I can't really show you how to build these because most of these are not mine, but I can tell you what I understand about them. And then, I think that helps be able to use it, is just getting a good understanding of how, like what the components are, but I don't think it's necessary to show somebody how to build something that belongs to someone else. Like it's, you can, if you want to go through the trouble of testing out different settings and stuff like that, feel free, but the whole algo is available for purchase anyway. So he's already put work into it. Might as well just get the whole thing, in my opinion. And then you can customize it. Like the actual algo that Simon uses is quite a bit simpler. Doesn't have as many lines and stuff. But I've changed it and made it a little more complex. Oops, I didn't mean to do that. Whoops. Cancel. I've changed it a bit, changed the colors, added some things of my own. And that's why mine looks a little different. Okay, so see how we did not get the yellow line above it? And then it's yellow, so we have to keep pushing here. If we now, this is where I can start moving my stop. Because the yellow is a sign of volume, momentum. So volume is acting like this is an impulse move, right? So either it's an impulse move, which is great, since I'm long, or it's not an impulse move, and sellers are going to attack that, right? So now is the first opportunity. I've already taken profit and I've seen signs of momentum. So now is the first opportunity where I can actually start trailing my stop. And it's the first chance I can actually consider taking some profits off the table. This is a great time to consider exiting the trade if it continues higher. If you are on a tighter target, if your target's anywhere around here, this is like the kind of spot, especially if I had 3 contracts on, where I'd be like, you know what, this is good enough. I got a good trade out of this. I'm happy, right? That's what this yellow should tell you. Volume is pushing like it's trending, and we're trying to go higher. But any sign of aggression now has the potential to reverse, especially if it happens right away. It suggests that the trend is just not strong enough to support. Because keep in mind, the momentum requires a lot of energy. And so if you have the energy, it's going to keep going. If you don't, it's going to fail. The reason we're getting energy here is because we busted over this VPOC, as well as the 200, the 13,200 big figure. But notice all we're doing is putting pink bars above it. So sellers are giving up, and that's why we're moving higher. We have not had any sign of actual buyers, we have not had any sign yet of actual sellers defending that level. So there's no reason to exit. But if the sellers don't participate, we can't know whether or not the buyers are actually putting forth any effort, because it doesn't take any effort to push the market higher when sellers give up. So it's great for me because price is going higher, but it's also a reasonable time to consider taking profits, because if suddenly sellers do participate and the buyers don't defend, it might be all over, right? Price is just going up because sellers are giving up. That's great, but it could all be given back if sellers decide not to give up anymore. So it's a good time to start trailing stops or taking profits, and considering where's my final target? How high do I really think this is going to go? Let's look at the higher time frame, right? Things like that. And here's that VPOC on the higher time frame. I don't have it copying that to that chart, but that's where that is. So if they can't hold this, you can just exit, right? And it's good trade. I'm happy. Doesn't mean it's going lower, but it's I'll just be done with it. And it might go higher, right? But like you have to draw the line somewhere. And in my opinion, if they get underneath this blue dot, it's just there's not enough evidence that it's going to continue going higher. But what I actually like better is taking profits into the strength as soon as I see those that pattern, the yellow and the pink. It's just a great time to start peeling some off. Now, if we can get a yellow bar that is not pink, that is a great sign. Let me make sure I don't have my target anywhere near here because we have not really. So I want it to get up here to 17, like 13 to 18 would give me confirmation that the market's actually trying to push even higher than this. But if sellers defend this, there's a good chance that we're going to retrace these yellow bars because volume is acting like we're breaking out. But if you look to the if you look on the bigger time frame, this is not a breakout yet, right? So if volume's acting like we're breaking out, I showed this on the candlestick earlier. If volume is acting like we're breaking out, but we don't get anywhere, we don't get through any resistance. The reason volume has to act like we're breaking out is because there's so many sellers sitting in this area, and most likely they're going to put up a fight. They're not just going to give up anymore. But no one wants to be first, so a lot of times you'll see them like wait until an aggressive trader comes in, and then they'll all pile in. So you'll see like pink, 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 and then red star, or yellow star, I mean, up here. Meaning that like a big aggressive trader decided to attack it. That's very normal. And you can avoid all that difficult decision making by just taking profits as it gets over these pink bars. And I think that's a pretty good plan in general. But if it's your last contract, you'd miss out if it goes higher, and that's the last one is always the hardest one to manage. Always. Okay, so we're going to wait. That's just, that diamond means there's a lot of volume in that bar. But that alone does not necessarily mean that the sellers are getting aggressive, because, like I said, this had a lot of volume too. This push-up had momentum to the upside in volume. That's what the yellow is. So big volume to the downside. It probably means there's the potential for buyers to get trapped up here. And if we push up here and can't break this high, then I'm probably done with it. But just the fact that we have big volume and a red outline, like I said, which means that there's some buyers at the highs, it's only problematic if this is an area that I would expect sellers to attack. And like I said, I don't really have any reason to think that sellers would attack unless we get under 13,200. Although on this time frame we did have VPOC here, so maybe I'm wrong about that. But for the time being, it looks to me like this is just a first attempt to turn the market. And because buyers have been succeeding in pushing the market higher, I'm not going to assume that sellers are going to have any luck immediately. Because as we saw, usually they don't. It doesn't work the first try, right? And then eventually it will work. But the first one, it's probably the least likely to work. But like I said, we have to get continuation here to the upside. Otherwise, I will pull out of my runner. Because if the buyers aren't going to respond to that aggression, then it's not ready to go higher. So the aggression isn't a reason to exit, in my opinion. But I need to see what the buyers do in response to that. Now on the 40 tick, we got a diamond here on the inside of the bar, meaning that the bar closed very fast compared to the previous bars, and that a lot of volume was in this bar previous to it. And it ripped right through that high volume area without much trouble. So, and that happens when traders get trapped. So there's a good chance that someone shorted under this low as we broke under the London low, which is exactly why I took this trade, right? That diamond confirms that this dip basically like trapped sellers. And then we got a triangle up after it, and that triangle was on a pink bar with a box. Okay? And the box is basically saying that we are shifting momentum above, back above an area that was heavily contested recently. So it's an attempt to push the market back through an area that was that there was a lot of interest in. People participated in a level, we went lower, we trapped sellers, and now we've pushed the market back over that area. Now, it doesn't mean we're going to fly to the highs. A lot of times it means that we're actually going to chill here for a minute and then make a decision. But the bar, like just like these yellow ones are bearish in doing the same, telling me the same information. It's saying, hey, we closed bearish in an area that a lot of people participated in, right? A bunch of people bought and sold in here, and now we've closed a bar bearish. In other words, if we get continuation, it's probably going to break a low. So now I've gotten a blue, and it says, hey, there's a lot of participation in here. We've closed a bullish bar back above where most of that participation was. So you might see some defense. That would be pretty normal. Sellers might try to defend this area because they sold a lot of it recently. But if they fail and buyers push higher, you probably have freedom of movement beyond this. And on that higher time frame, that could mean getting up to 13,230. And that's the important thing to understand, is that when you're and that's where my target is, 30.50. But when you're looking at the higher time frame, what you're really looking for is, like, I'm not going to trade the setup here. Like, I'm not going to say like, oh, there's a diamond, so I'm just going to buy. But instead, I'll say, hey, that's a bullish diamond. It's at the location that I would expect them to defend. Buyers got continuation beyond an area of interest. It's giving me analysis of sentiment on a higher time frame. And it says sellers may be trapped, buyers are trying to push. Right? So, in other words, if I can be long on the smaller time frame, I probably should be. Well, I was, right? I got the setup down here. We got long. It pulled against us. Took profits as it ripped up through 200. And now my runner is profitable. And as you can see, not surprisingly, this one bar of selling was not enough to turn the tide. And we knew that that was likely because of these yellow bars here. We have to get underneath the yellow bars to really prove to any buyers, or it's to prove to the sellers who got trapped that they don't have to exit. Because sellers got trapped down here, right? Sellers got trapped down here under this low. And now they are hurting. So when they get an opportunity to exit their short by buying at a little bit of a discount compared to where they were 10 minutes ago, they're probably going to take it, right? So just because they get on discount doesn't mean we should exit the long. It means let's watch closely to see if the sellers are still stuck. Because if they are, they're going to push the market higher by exiting their short. If they're not nervous, they're going to pile on and we'll get a triangle down. Now, you can see the red triangle has already appeared, but that's only valid if we close bearish. So it'll disappear if we close this bar bullish. Once the bar is closed, nothing will disappear anymore. And it'll probably change color or have, that plus sign's not going to be there. It'll look totally different when it closes, but once it closes, it'll stay the same. That's a very important thing to understand about the algo, is that the signals are only valid after the bar closes, so you can't make decisions while the bar is live. I can analyze it, and I can say, if this bar closes, this is going to happen. But until that happens, till that close occurs, those signals are meaningless. It's just that part of the condition has been met, but not all of it. And until all of those conditions, because all of those are conditional alerts, until all of those conditions are true, it's not valid. And in each case, every single one of these algos requires a close of the Renko bar. Note on the 24 tick, we got a star, traded lower. If it's bearish, it's going to get wrecked there because you had buyers that were aggressive followed by sellers that were aggressive. But instead, we got divergence, diamond, so lots of volume, and star up that occurred below this star pattern, right? We had a purple bar, buyers gave up. They gave up till it was underneath the London low, and then suddenly an aggressive buyer showed up. The dot means sellers got trapped down there, and the green outline means sellers got trapped down there. So it's two different ways of basically measuring the same thing. So there is good reason to believe that there were sellers down here, and they've now been trapped. And then confirmation occurred when the wick was unable to take out that low, and it's once again green. It's a pretty clear indication that that price is at least trying to lift. Now, can it run into resistance? Sure, right? It's probably lifting to resistance, but if it runs into resistance here, it may need to come back and re-auction this, right? And that's why I said, if they retrace this, I'm not going to take a stop on this trade. I will go ahead and exit for a small win, because this momentum should propel the market higher, and when it doesn't, I'm no longer interested in the long in this location. So, like I said, I think the best choice, if you have like 3 contracts, like what I usually do, I would take profit once this pink is like producing, like pink, and then like anything up here in this next bar, you can just exit most of your position and get down to like a third or a fifth. That's your ideal scenario. But I only took 2 contracts, so I had to take some profit at 200, the big figure, in case they immediately rejected. And that way I can hold my other runner until there's clear evidence that we're no longer trending. And that would be getting the yellow line, the VPOC line, below the blue dot, which, like I said, will occur before my break-even point, guaranteeing that this entire trade will be profitable, which is nice, right? But that recognition should help me hold that runner as long as I possibly can. And when I say like basically that means either to my target at 13.230.50, or only letting it go when I have clear evidence that this impulse wave has failed to produce any continuation. Now, this wick coming back into this red bar and closing bearish right there, that was the first sign of trouble, right? That really shouldn't happen very often when it's super bullish. So you could technically take profits right here, and there's nothing wrong with that. But because we have that big figure here, I'm gonna let it trade under the big figure and see if there's a buyer waiting down there. But if it wasn't for that big figure, I might make an exception and say, you know what, this is looking kind of bearish. It's not really. They had some aggression to the sell side, and nobody defended it. Nobody defended the dip. But like I said, I think they're doing that because of the big figure, and that's just a nuance you get better with practice of knowing, or having a better. It's no one knows, but you get a better feel for like the likelihoods, the statistics of like how often things like move against you. 2 bars, 3 bars, 4 bars, like that. It just takes practice with the algo. And in my experience, getting that triangle down, it's usually a sign that impulse wave is done. But when there's a big figure right below us, I'm not really confident exiting the trade above when we haven't even tested that big figure on the pullback. Because normally you're going to get just a little bit below that, and then the buyers are going to see that there's no more sellers, and they'll jump in and push us back to a new higher high. That's just the way the market likes to. The market doesn't look at levels as like a brick wall. It actually looks as exactly opposite. It looks at it as something that the market is curious about what exists behind those walls. So it's going to go check it out, put a flashlight back there, walk around, throw a couple stones, make sure nobody's hiding back there, and then they'll go back to bed, right? So it's the same thing. Like, it's an alert the levels are going to be seen as like an alert. When the price gets there, everyone's on alert and they're going to watch and see what's going on. And if there's nothing to worry about, they're going to go back to business. But usually you're going to need to see what's behind that wall before you can get any real movement beyond it, because nobody wants to be a buyer when not a lot of people want to be a buyer when they're not sure that there's more buyers lining up below them. So if you've gotten that pullback into the big figure or into VWAP or whatever your level is, a moving average, whatever the hell you want to use, and they find buyers under it, well, now that level should basically hold, right? Once you've gotten buyers show up there and they've pushed higher. So like, for instance, if this, now that we've tested underneath 13,200, if we now push to a higher high, it makes sense to put your stop underneath this low. It does. It makes a lot of sense because they've already tested below it and found buyers. So if this impulse wave is going to continue, it doesn't need to go back there anymore. Sorry about the fighter jet. I live near Nellis Air Force Base, so they occasionally fly this direction right over my house. So let's see if they can, like I said, they need to close the bar bullish. And then what we should see is an extension. If they don't close the bar bullish, we should be looking for an opportunity to exit. I'd prefer it not be pink, personally, because that means that sellers are just not participating. They're giving up. They're pulling orders from the order book. And it doesn't take a lot of effort to push through sellers. And so the fact that this is taking so long to defend, yet it's pink, is like, I mean, the bar's not closed yet, but if this takes forever and then it closes pink, it's like, that's not very meaningful. That's just like sellers just didn't show up. But what's going to happen when sellers do show up, right? So I'm definitely not confident if this closes pink. If it closes white or green, super good. If it closes bearish, it's probably going to stop. But the pink bars are not always bullish. It's just a sign that there's very little participation on the sell side. And the purple is the inverse of that. No participation on the bull side. But it's not valid till it closes, so we will see. Now, if it closes purple, we're gonna have to wait, because that basically just means buyers didn't really give it a good try. But it'll probably stop. Yeah, so purple. So they basically need to immediately attack this. Otherwise, I'm gonna have to step away and take my 10-point win or whatever. So testing underneath that big figure, we want to see participation here. Purple bars is not what we want. Pink bars is not what we want. Bearish bars is not what we want. We need a white bar here or a green bar here, otherwise I'm just going to exit. Doesn't mean it's going to go back to the low, but it's just not showing any signs of interest to hold that level. And you got to draw the line somewhere. So they basically need to hold this or I'm done. Recognizing that I might be exiting right before they rip to the high side, to the upside, and that's just the way trading goes, right? Sometimes you just make a choice and the results are not preferable. And that's just something you got to live with. Okay, so I'm out. Okay, and so I got a profit of $220 in both accounts, so $440 for that trade. At one point, it was up almost 800. So had I been trading 3 contracts and took profit where I really wanted to, where I mentioned that this is probably a great time to take profit, that's like almost like a $600 or $700 win, right? But with 2 contracts, if you do take your profit here and it pulls back 1 bar and then rips for another 30 points, you miss out on it. And like I said, had that happened a little closer to my target, I might have gone ahead and taken it. But the fact that we were not even halfway to my target, if we would have been at 20.50, like up here, I would have just exited. If I saw this at 20.50, I'd be like, okay, I'm out. And the one thing that I could have seen is that we did have a pretty prominent VPOC from this consolidation on the 40 tick. And when we tested above it, they immediately rejected it with aggression. See that? That was right here. So I might, like I said, I had a sense that was probably a good time to exit. But as soon as I saw the triangle down right here, if it wasn't for the big figure being right below me, I would have said this is probably a great time to go ahead and I did say this would be a good time to go ahead and exit. But with the big figure there, you gotta assume they're gonna play games. Now, interestingly, it's still purple. So if they now blast this off, it could actually go higher. And if you leave your stop where it was initially underneath this bar here, you'd still be in the trade, right? But like I said, since I'd already taken profits and I'd already seen an opportunity to take profits a second time, but just chose not to, at that point, I don't want to take a loss on that trade. But is it technically still valid? It is technically still valid. And like I said, we're almost back to the entry here. But this is where it's like, you have to decide whether or not you are willing to risk what you just made on a trade that, like, the opportunity may have already passed, And in my opinion, I'd rather just wait for the next setup. That's just my style. But like, there's a lot of people that will what's called campaign at that level. Like, they had success here, it's going to pull back, they're going to buy again and put their stop down here again and risk that 480 or whatever I made, 440, to get another 20 points. And that's fine if you're comfortable with that. I find that leads to tilt because I feel like I'm being punished for being too aggressive. Like, I get something right and then I aggressively give it back, right? And that's kind of my pattern in the past when I used to blow up accounts all the time before I found Simon's Room, before I used the algo, was do really well for a while and then just like blow up in like 2 days, being too aggressive. So because that's my tendency, like subconsciously, I don't campaign. But there are people in the room that will do it, and there's nothing wrong with it, right? But just realize that, like, it's going to depend on your tendencies. If you have a tendency to be super reserved and you only take 3 trades a day and you're looking for a way to expand your trade setups, campaigning a level that's been successful might be a really good idea. But for me, that just leads to tilt. Okay, let me take a quick break and grab something to drink, you guys. I will be back in a minute. Let me just sign into the chat so people know that I'm not abandoning, but I'll leave it on though. Give me 2 minutes, and like I said, I'll leave it on until in case this happens to jump here, and it might. And like I said, it's not invalidated on the 40 tick. It's not invalidated on the 15 tick. As soon as this closes, like, you could technically take that long, right? It would be at 99. If it hits 99, before it hits 87, so 1 tick beyond the bar predictor, it's closed then, right? Because if it hits 98.75 and it goes beyond that, it's going to close the bar. So I'll just give it a second. Okay, so star with a ring, with a diamond, it's technically a long, right? But I already kind of ticked the long down here, and I had reason to believe that there were sellers here. But the purple, and then star is usually a pretty good trade. So it's probably okay. Tempted to give that a try, honestly. But yeah, you could do it on any pullback here. The ring on a higher low is actually pretty good. I'd prefer to get it now that I've got the triangle. I'd like it to come back just a little bit, and I'd consider getting long. I hate that it's right at the big figure. That those big figures tend to mess with volume, and because the algo is looking at volume a lot of times, it can throw signals that are like kind of noisy. So I don't love buying it way up here, but if it pulled back a little bit, I think it's probably a decent buy. Okay, I'll be right back. I'm not going to take it. I'll be back in a minute. Hold on, guys. All right. It does look like that campaign setup, the pullback is working. It was totally valid. I definitely could have taken it there, but like I said, there's something to be said about like when you have a successful trade, you have to decide ahead of time how you're going to respond to like what happens next. Some people are more tilted by getting getting trailed out and then seeing price go to their target. And if that's you, then campaigning is probably perfect for you, right? And there are times where that does affect me. I'm not saying that never bothers me, but generally my personality, my tendency is to overtrade. So if there's a risk that I might be like like a little pumped up, a little high off the of a win, I'd rather skip a trade, even if I know it's valid, just to like take a moment to like collect my thoughts, make sure I've got the direction right, the location right. Like if I've already taken a win, right? Because think about it, like $440. I realize it's not like a banner, it's not like a best day ever or something, but like it's a respectable. It's right there, that one trade in the two contracts. That is a respectable day in most people's book, right? If you have a job that even if you didn't like that job, and you made $440 a day doing it, like most of us would probably consider going back to that job tomorrow, right? Even if you didn't like it. Because $440 a day, that's like, what is it, like $100,000 a year? And I'm not saying that you're going to make money every day trading, obviously. It should be obvious. Sometimes you're going to lose, right? That's just the way trading goes. But we have to be realistic about the fact that, like, you know, you're not going to repeatedly, you're not going to win every single trade, right? We know that there are stops out there, but we just don't know where they are. We don't know which ones will stop and which ones won't. That's just something you kind of have to accept. Wow, that plane is still out there. Sorry. But knowing that the stops are out there, you have to decide ahead of time, if this is a stop, am I potentially going to give away more money than the stop? In other words, will I end up trading poorly? Because psychologically, taking this next trade and having it be a stop is going to bother me. And if that's the case, especially if you're already up in the day, you probably shouldn't take it. Or maybe take it in, like, what I could have done, I could have taken it in my like Apex evaluation account and gotten 10 points. That probably is what I should have done. But yeah, I think it's really important, because this game, trading is all about like capital preservation. Our process needs to help us keep the money we make. Anybody can make money trading. Most people can't keep it. Right? It's too easy to draw down in trading, to ignore things like our own emotions and the effect our emotions have on our future decisions. So if your expectations are that you're going to be green on the day after you make $440 in one trade, and exiting the day red would tilt you, or risking exiting the day red would tilt you, just be done. Or wait for the really good setups that you're willing to go red on. And like I said, while this is a pretty reliable scalp, especially on a higher low, the ring bar followed by a triangle, it's not a trap back in. It is a purple bar star, which is also pretty good, but not 70%, but it's good. But I've got win rates. I've got trades that have higher win rates than that. Like, many of these will work, but like there are also some that will stop. I tried to do a journal yesterday about 2 new trade setups, or actually they're old trade setups with just little tweaks I made on them. But the video didn't work, so I deleted it. And I lost internet, and so it just didn't record. But I can share those now. If it's not going to set up again, I can show you how those work. The first one has to do with these red and green outline bars. It's a relatively simple concept. They are signs that there is a potential that traders might be trapped in the wick. So this green outline means that lots of sellers participated in the wick. Now, in this case, it wasn't divergent. It wasn't enough to be like more aggressive selling than aggressive buying. But it basically just means that most of the sellers were down here and most of the buyers were up here. So it's like sellers at the lows, buyers at the highs. And then the red one, sellers at the lows, buyers at the highs, right? Buyers got trapped in the wick, sellers pushed aggressively to close the bar. On the highest of time frames, when those show up on the apexes, like at a swing high or swing low, you're often going to get extensions. Not every time, but often, especially if you're going with the trend. So, for instance, if I go to an 80 tick, what you'll see is a lot of these swing highs will have red bars. Not all of them, but a lot of them will have red bars. And many of the swing lows will have green bars, right? If you get them outside of this blue Keltner channel, they're way better. So like this, way outside the Keltner channel, it's probably going to get a lift. Where is it going? Probably to the middle of the Keltner channel, if not the opposite side. That's exactly what happened. When you get them inside the Keltner channel, like this, it's not an immediate buy. This simply means that during this, like whatever this is, accumulation phase or whatever, that there were sellers down here and buyers up here, but because there's no momentum, it's not going to necessarily immediately do anything. And instead, the better way to trade this is actually to wait for the trap back in or the triangle up. Like, it's a sign that there's buyers in the market and that they might have trapped some sellers, but because the location is not really meaningful, there's no reason to think that sellers can't just release them. This one too, inside the Keltner channel, didn't go anywhere, right? We get below it, we trade above it, we get below it, we're coming back into it. It's kind of meaningless, right? It happened to set up with the same conditions, with sellers at the lows and buyers at the highs. But because the location was kind of meaningless, like it's just kind of noisy, right? This one, this green one in the middle of the channel, not all that meaningful. This red one, right in the middle of the channel, it's not necessarily going to go a lot lower, right? This high is still vulnerable to get swept. This one reached outside of the channel. This one reached outside of the channel. This one reached outside of the channel. Those are likely to get some continuation lower, right? That's how it works in the higher time frame. If you tried that on the lower time frame, you wouldn't do horrible. Let's just see how you do from the beginning of the day. Let's just take every one. Hold on, let me just erase the lines, erase the profiles. Okay. Now, on the smaller time frame, I use a little bit of a different channel. I use what are called fib channels, which are, it's filled in this area, in anywhere inside this area, or anywhere inside or beyond that area, right? So this is like neutral, anywhere inside here, okay? And if it's inside this gray area or above, or below the orange or brown or whatever, or inside the brown, it has the it's gone a little bit further than neutral. So this one, pretty good, right? It went below the channel, you get a lift. Okay. That's pink, that's not red. Nothing, nothing, nothing. Red, outside the channel. That one stops. Okay, that one we trade above. Then we get another one outside the channel. I can't tell if that stops or not. I don't think it does. It did not get 1 point behind it. I put myself 1 point behind the bar that the entry's on, so, or the one with the apex. So right here is where your stop is, and it just missed it and worked. So that's a success. Note we did get a green bar, but it's clearly inside the channel. It's not down here, right? This one is just like vulnerable to get trapped. It gets trapped right here. Let me go lower. Now I need green ones. The red ones I'd ignore. Nothing. Again, it's not the green inside. That's just a volume shift. Look at the wick. The wick needs to be green or red. There. That's a buy outside the channel, right? Stretched outside the channel. As soon as it closes, that'd be a buy, targeting resistance, and then you'd be out. This is a sell outside of this channel. Goes to the other side, you're out, right? It's just a scalp strategy. Worked pretty good today. Okay, here's one that stops. Outside the channel, green outline, then you get another one. Outside the channel, green outline, stop goes right behind that, one point behind it. They get behind it and stop you out. And then it goes higher without getting you another green one, right? This red one is like, it's not outside the channel. See how it didn't reach beyond the high one? So this is, but it is within the area. So this is close. Generally, I'm going to skip it. But if I thought it was bearish, I could take it. And yeah, it doesn't really get any extension. Right now, if this one was green, it wouldn't have stopped. But the green ones were over here. So those stopped once, right? This one stopped here and this one stopped here. So whether or not you took it here or here, it is like a 10-point stop. And then it went without you. And that sucks. But I'll show you a trick with that. Okay, and then this one, clearly outside of the channel. Nice extension. This one, wick outside of the channel. Nice extension up. This one, wick outside of the channel. And it's trying to extend right now, right? So most of them are working, right? I don't know if this one will or not. Suspicious, to be honest, whether or not this one will work. Just because I think it was produced due to the big figure. But, okay, so yeah, getting them outside the channel might be a reason to at least consider pausing unless you've got a lot of momentum. Now here, we had a lot of momentum, so I didn't take profit here and I didn't sell that. Because oftentimes, even when it's outside the channel, it still won't, like if it's trending, let me try to find a trending, because this works just fine when it's mean reversion, when it's neutral. But look what happens when it trends. Here, let me try to find a trending situation here. There we go. Trending down. Okay. Bigger time frame is about to trend down. Look what happens. So this time frame is in downtrend. We're looking for blue and green bars on the 15 tick. Right there. Outside the channel. Green. Immediately stopped. Outside the channel. Green. You get 10 points. 50-50. Green outside the channel, stopped. Green outside the channel, stopped. See the pattern? it stops working. It stops working consistently enough to take the trade. Now, if you use the bigger channels on the bigger time frame, this one works because it's still mean reversion. Right? That one works. This one's inside the channel. We don't do it. This one reached outside the channel. Works. This one, outside the channel, fails. Can't even get it back to the channel. That's a problem for bulls. It means you're trading the wrong direction. And then the next time it triggers, it's outside, it's not on the right side of the channel. And then that one is outside the channel. It's mean reversion, probably going to work. Right, so now we're no longer trending. So there is only one of the good news about the higher time frame is you don't have a lot of opportunities to lose. But if you know it's bearish, such as you've had blue boxes or purple backgrounds, and you're not able to get back above them, it's not a good deal. It's not a good proposition to buy it. And that goes for this time frame as well. The problem with the 15 tick is they can show up over and over again. And so if you don't heed that rule, because you know that sometimes you get 10 points, but most of the time you won't. Okay, so that's the difference. When you're looking at this small of a time frame, realize that especially when it comes to trends, you can't trust the stuff that works. Okay, so when something works okay on a higher time frame, like the reversals on the green bars, you can't do it on a tiny time frame. You'll get totally bulldozed, right? So to avoid that, there's two ways I've figured out that I can use those green and red outline bars and avoid the bulldozing on the smaller time frame. And this actually works on the higher time frame too. It just won't set up very often. So number one is we know they work. We know this green outline and this red outline candle will work if they have a wick outside of this channel. So both of these are valid, and it's not trending, right? If it's neutral and you can get it to test outside the channel, and they come back and they close green on the bottom or red on the top, you know the likelihood is you're going to get 10 to 20 points back to the other side of the channel, or back to resistance, or back to support, right? That we know. So then, like I said, it's not going to work if you're in the opposite direction of a trend. And if you're trending, you're not going to get the green bars. If you're trending bullish, you're not going to get the green bar down here most of the time. So then the question is, how do you avoid trading them against the trend? And the way to do that is using, like I said, there are two ways to do that. Number one is to use the purple and pink backgrounds. So here's a pink background here, right? And then the purple one will show up if it's trending lower. Here, it's easier to, that's pink here. Purple. That's what the purple looks like. So when we see the purple background on any time frame, really, it's a sign of momentum to the downside, and the pink is a sign of price momentum to the downside for purple, to the upside for pink. Most of my colors are pretty consistent on purpose. So once we see that, what we can do is we can say, I don't want to fight that trend. So in other words, I don't want to be a buyer unless I can get above either that bar, if you want to be aggressive, or if you want to be conservative, go to the bar before it and find out where most of the volume was developing point of control, which is right here. Right? And I go to the bar before it because by the time you've seen the purple, there's already momentum in the market. Before the purple showed up, it's potentially neutral. And so wherever that neutral volume was, right? So either here, or I guess you could do it here, right? But if you look at the dotted line, that's my developing volume point of control. So one of these levels in here is probably going to act as resistance. And if you want to be really conservative, you could use the one that's highest. But I usually go to the bar right before it turned purple and mark that level. And so I'm basically saying I don't want to be bullish. And then I go to the smaller time frame where I'm actually looking for trades. I don't want to be bullish unless I can get the yellow VPOC, which again is the VPOC of the bar, right? As if each of these bars are daily charts. This is where most of the volume is. But they're not. They're 15-minute Renko bars. But if they were daily charts, that's how that would work. The math is the same. I need to get that yellow line above this white line. I'm going to get rid of this one because we'll do the conservative one first. Because I got the purple on one of the time frames, I need to get price, the end volume, the yellow line, above that white line on a bar that is bullish and not pink. So, in other words, I would skip this one, right? Because I've not yet gotten volume above this level. So that one gets dropped off. Now, does it actually work? It does, right? It did work for 10 points. That's fine. I'm okay filtering out these occasionally and missing out on the big losses, right? This one, skip, right? And that one stops. So I need to get all the way up here or get another purple bar, and then I can say, okay, we're probably neutral. If I get another purple background and then and we've shifted volume lower, then I can move this line lower. But I haven't gotten one, so I gotta wait. Now look, we got price, but not volume, right? We did not yet get the yellow line above it on a bullish bar that's not pink. So we wait. Am I taking this? No. I'm gonna skip it. Does it work? It does. Is that okay? Yes. This one, it's not beyond the channel, so I'm not taking it anyway, right? Note volume comes up here. Does not yet get above there. Am I taking this one? It's beyond the channel, but we have not yet breached that important level, so I'm skipping it. Okay? Now, this one works. And that's okay with me. Now, we've gotten above it. Now, if I get mean reversion and a green bar, as long as I haven't gotten purple over here, I'm good to take my bull trades. Now, it didn't set up here, but I got other ways to get long. But now I'm looking for longs, is the way to think about it. I'm looking for longs. So this purple bar with a dot is a long. The green in the inside is a long. Pink, white means that any pullback I can buy, right? Like there's all sorts of ways to get long. It just didn't set up with the green bars. But if I would have seen a green outline bar that reached outside the channel, that's a buy. Because see, I have not gotten any purple. I got pink, which I'll talk about in a minute, but I haven't gotten any purple, so there's no reason to think it's bearish. So this is a buy. This one did not quite reach the channel, so I'm skipping it. It's kind of neutral. Still haven't any purple. We're just going to keep going until we get purple. We'll do one side at a time. Then I'll go back and do the other side. Oh, I think I missed one. Oh, nope. It was just, yeah, this is a buy. And that one does not stop. That one works. This is outside the channel. Not going to take it. Okay, you get the idea. Now let's do the other side. So what I can now say is if it's pink, like this, I can do the exact same thing, but to the opposite direction. So I can say, now that it's pink here, I know that price has momentum. So I could be aggressive and say I don't want to short unless we take this out, but I might take some stops. So instead, I can look behind it. Now, in this case, it's a pink bar, so I'd look one more behind it, because the VPOC on a pink bar doesn't really matter that much. But where it happens to be the same anyway. But see where the developing VPOC was there? That's what I need to see broken before I consider taking shorts. Okay? Once that is broken, I don't want to be longing. But a very conservative way to avoid trading against the trend is as soon as you see a sign of momentum, put the marker at the VPOC, wherever it was before that momentum was, the developing point of control, and then wait until you get under that before you short. So am I taking, now I'm going to go to this time frame because that's where I'm usually trading these days. And I'm now only buying greens and I'm not shorting the red ones, right? So this, I'm skipping. Oh, look, we got another pink one. Pink background. I can now move this up to here. See that? Because I'm going to the developing VPOC on the bar before the pink, right here. So at this point, I can scoot that line up and say, okay, if I can get the yellow line below this on this bar, starting now, if I can get the yellow line below this on a bar that's not purple and it's bearish, I can now start to short. But otherwise, I should be buying only. So like I said, I bought this, right? And then I'm waiting. Can I buy this? I mean, it's barely touching the channel, but technically it's not bearish, right? Can I sell this? No, because if you look, I got the yellow line below the white line, but not on a bearish bar that's not purple, right? This bar closed bullish. So this is a no-no. Don't short that. No, we come down to the level, we get purple bar star, that's a buy, and it's clearly not short. It's clearly not bearish. So, you know, if you have that in your repertoire, you can take that. Am I taking this red bar? No. Even though it reached beyond the channel, we have not yet gotten under that key level, that white level with VPOC on a bearish bar that's not purple. So it's not a sell. And as you can see, it stops. Am I taking this one? Nope. Still haven't done it, right? Might it work? It could. It does. It works. I miss it, right? I don't lose anything. I just miss it. Now, here on the 15 tick, we've gotten the VPOC of the bar below this important developing point of control, right, that I marked from the 24 tick. Now I don't want to be buying, and instead I can sell. So now if I get red bars that are beyond the channel, I can start taking them, in addition to like diamonds and other things. And I might want to skip things like purple bar, green bar. Now this one worked, but like this diamond stops, right? This green one, should I take it? Probably not. It's in a good location, but it might stop. And it almost does, but not quite. So that one happens to work, and that's okay. I'm okay filtering that out. Now if I get another pink, or if I beat a purple one, I can change my tune. But at the moment, okay, now we've gotten back above it. So see here, this key level before that we were underneath, we've now reclaimed it. I don't want to be short. Okay, so now I can buy only, unless we retake it again or get another pink one. But right now, that is the level. That's basically my line in the sand. You can see we traded under it, but then closed above it. That's usually pretty bullish, and it rises. Should I sell this? No. We are not below that key volume point of control. Oh, we had a pink background, so I can now scoot this. Oh, it doesn't change. Look, it's right there. So as long as I'm not under that, I'm not taking the red bars. So am I shorting this? No. It probably works. Nope. That's why I'm not taking it. Can I take this? No, it's not. It doesn't have enough expectancy. The wick does not go into the channel, so it's not a buy. I have to wait. Watching that level. And right there, whoops, right there, we trade under it. Note I was not long here, right? But I also was not short. And you can see that here, the VPOC is now below that. So now I flip. I don't want to take longs. I do want to take shorts. We re-breached it again, and now it flips again, right? We can keep going back and forth like that. So now bearish. Only bear, only bear, only bear, only bull. Only bull, only bear. Eventually we're going to get pink or purple. Okay, so am I taking this? No. I'd skip that one. Does it work? It does. Am I taking this? Yes. Oh, sorry, no, because we've gotten back above it. So no, I'd skip this as well. So what we need here is a pink or a purple to like identify momentum. When you see that it's going back and forth, you could just start taking all of them. If you can identify that this is not trending, you could probably stop using this rule because it's neutral. How would you know that? You could look at a higher time frame and you can say, oh, I see. I'm just trading from one side of the channel to the other. I can do business on this higher time frame. So if I can get a test up here and I can get a red bar, where's that? Up here. So this red bar, if I identified that as neutral, I could consider taking it, right? And then when it gets back to this one down here, if I get a green bar down there, so this, I could consider taking it. Now, it's not foolproof, right? It's not foolproof that way. The more reliable, conservative way to do it is to actually wait for that sign of momentum because they just work better with momentum. Oh, damn, I guess I could have, my level continued to be good, and that it actually came back into that level. That would have been a good place to add. I missed that. That would have been a good long. That's okay. At least I got calls from before. Before I started the stream, I bought some calls. So again, that is a simple way and very conservative way to trade those red and green bars. Let me show you another way that's more aggressive, but is going to catch more trades. It'll also take more stops. So rather than using the backgrounds that are price momentum, we're going to look at whenever the bar comes in. So let's say this one here. We want to know, can I take that short, the red bar? What I'm going to do is I'm going to look to the left and find the next apex or big wick. So the apex has a flag on it on mine. On Simon's, it's a little star triangle looking up, like a baby blue triangle. But for me, it's this little flag. So I'm looking at this bar here. It doesn't have to be red. It's just wherever the apex was in that same direction. So this is the bar I'm wondering about. Can I short this? I'm always looking left to the last apex, or if there's no apex in the general area, the last wick. So it's either here or here, right? And what I'm doing is I'm finding the volume point of control, developing volume point of control there. And the rule is I can short once we break under that. So it's kind of a shortcut when you don't have a lot of momentum or clear momentum in price. It's a shortcut to decide which direction is probably in charge. Wherever the developing volume point of control was the last time you traded in this area and had a wick in the direction that you're going. If you don't have a wick in the direction that you're going, you're not trading in the right direction. So if you were looking to short here and there was no apex over here at all, you're just fighting the trend, right? But if there is an apex, you could say, well, where was volume from like a time-based, where was volume developing from a time-based perspective? And it was developing way down here. You say, well, what happened? Oh, we did purple bar star with a ring bar and it lifted. Should I be getting short? Not unless I break that, right? Now, on the other side, we got this one that I said I didn't take because I was just kind of like still a little bit affected from the earlier trade, but I probably could have taken it in eval. That was a green bar, right? So now I could say, well, where is the last apex or wick in this area? And that would be right here, right? Where was volume developing at that point? You can see the dotted line, or you can just draw it yourself, but it was developing, oops, right there. I need to be above that to be bullish. Are we above it? Yes. So by rule, by the aggressive rule, this is a long. Because I got a green bar, it reached outside of my fib channel, and I'm trading above the developing volume point of control of wherever we were on that wick before. Okay, here's a red one. Can I, if it's right here, can I trade here? Where is the wick to the left? Or the apex to the left, right here. Where is volume point of control developing at that point? Here. I can trade short if I can get volume, the yellow line, below that. On a bar that's not purple. Does that count? No. So I am not taking this because we're not below that white line. And there's still no reason to think that it's bearish. And they go purple, purple, purple. So had I held my stop in place and not taken this, which was, I mean, I was just being conservative because it actually was just purple. I think I mentioned that already. I could have technically held it. It was still bullish, right? And there's no reason to sell. Okay, this one did reach a little bit outside of the channel or into the channel. So let's analyze this one. Okay, let me just erase the lines quick. This one right here. Where's the last wick in the area? It's here. Right? Developing point of control, here. This suggests, this way, aggressive way of doing it is suggesting that we are already below the volume point of control, the neutral developing volume point of control. And therefore, we may be bearish. So by that standard, if you have expectancy to support, like it to a target, right, which is usually support or just under support, you could take it the short. You can see it does go lower, but it runs into high volume here, an area of high volume, and it bounces. Okay, so that one we'll just call stop. Okay, here's a green one. Where is the last wick? It's actually right here, right? Where is developing point of control? Way up here. Can you take that? No, you don't take that because it hasn't reached that. Not surprisingly, it stops out, right? It gets below it. Okay, what about this green one? There was another way to get long, and I did it. We talked about it already. We did it live. How about this one? Here's the last wick. Right here, in that area. Where's the developing point of control? Still way up here. Have I gotten there? No, can't long, right? Doesn't mean I can't long until then. It means with this setup, using just the green outline bars, it's not that's not enough evidence that it's a good long. Okay, red. Where's the last wick or apex to the left? Probably one of these, right? We'll say this one. Be more aggressive. Here's the developing volume point of control that. Have we breached below it? Nope. So if the next bar, that we could short. Now you can do the bar after it is okay. As long as it's a mini bar that's purple and it's triangle, that's a short. Okay. Now that we've gotten under it, all good. Green. Okay. Wick volume point of control. When can I buy? When I get the yellow line on a bullish bar above that. Not yet. Now. Buy. Goes higher. Right? It's just a scalp. Again, it's got to be a purple or green bar outside the channel. So am I even thinking about buying this? No. This one. Right? If I wanted to, how would it work? It would be this wick. Point of control is way down here. We're already above it. It would be a buy. And I go right to resistance and it reverses and it stops. Why? Because I had no room to go. Because remember, the way that these fib channels work is it's basically telling me what the likely range is in a normal market. In a normal market that's neutral, how the heck do I get rid of that one? I can't get rid of that arrow. There we go. In a neutral market, it's going to go from one side of the fib channel to the other side of the fib channel back and forth. So it shouldn't be a huge surprise when that acts as resistance. I don't want to buy at resistance. I want to sell at resistance. So this is in the right location. But where's the developing VPOC? It's way down here. Can I sell it? No. Not surprisingly, it comes right back at it. I don't think it stops out, but it was definitely difficult to take. What about this one? The last wick is here. My developing VPOC is way down there. Should I be shorting? No. It's bullish. Green bar, last wick, right here. Developing volume point of control at that point is here. Now that one was pink, so we could go one to the left. Watching the yellow line. Hasn't gotten above it yet. Now it has. Buy. And your stop goes underneath that. You could buy any of this pullback. Anything in the green bars range is buyable. You don't have to buy this. It can be any of this. Right? Because it's probably bullish. And it goes higher. I'll do like two more. Okay, red. Right? Last wick. That wick had a volume point of control here. Are we below that? Yes. Potential for it to be bearish. Tries to go bearish, gets into the channel, and bounces. We're going to call that a stop. All right. Oh, did I miss one? Here. Last wick. Volume point of control. Get volume. Get yellow line below it on a bearish bar. That one stop. That one... Really, the only this is your target, right? So it might not have gotten 10. Let me see. Did it get? I don't think it did. I don't think it got 10 points. So we'll call it a stop still. But then this one works, right? Oh, that one you wouldn't have taken because the volume point of control is down here. That sucks. So that's just an unfortunate sequence. But it is an aggressive trade. Okay, wick is here. Volume point of control is here. I'm not taking that long. It works. Red. Just barely into the channel. This is my last wick. Volume point of control is here. If I had expectancy to a target, it's technically short, but my target's right here. It tries to reach it and it bounces, right? So when doesn't it work, right? This whole area here. Now this one, the wick is here. Volume point of control is here. That's not a trade. And then this one, wick is here. Volume point of control is here. That's a buy. Right? This one's good. So that one works. This one is not a... last wick. Yeah, see, you might have gotten tricked here if you didn't recognize that it wasn't high enough. You have to see that you don't have good risk reward here, right? Risk reward is better to resistance from here than it is to support from here, right? So I favor the bull side here, but once it starts getting very choppy and tight, there's a higher likelihood of stops, right? So this one worked, this one worked, and then look what happens. Price starts to chop. Well, this one just straight up failed. But it again, it technically made it to its target, but it didn't have very good expectancy. It wasn't very high. It wasn't above the channel. It just barely touched above the channel, but it didn't get the yellow line above the channel, right? So if this one was red, that would be a better place to sell from. Getting the yellow line above the channel helps a lot. This one did not get the yellow line above the channel, but it did work. This one did not get yellow line above the channel, and it fails. Or below the channel, I mean. This one did get yellow line above the channel. But again, you'd have to breach. Oh yeah, and you've breached this. So that short does fail. So that's just a straight up stop. But look what price action's doing when it fails. It's on the higher time frame. It went higher, right? It looked a little bit bullish, and now we're chopping in that area. So yeah, it shouldn't be a big shock that it's going to take you a couple tries before you finally get them to release. And then the other easy way is go back to that conservative way of having the pink bar, VPOC on the bar before it. Just don't short till you get to that. So no short, and technically no short, so you miss it. But now you know it's bearish. Now you can start shorting, right? So you can kind of combine the two ideas and say, like, if I'm like here, I'd be relatively confident that bull trades are working and bear trades maybe aren't, unless I got to a level that I expected them to hold. But you can see on the higher time frame, we had a pink, right? There. Right, here's the pink, and then this was before the pink, it was here. So it's basically saying, and really there was another one over here too, but that one was way up here. So let's just use this one. It's saying if I can't get the yellow line underneath this white line on a bear bar, that's not purple, it's not bearish. They got it below it, but they closed bull. And you can see that now they pulled back into it and they closed bull. It's not bearish on this time frame. It's neutral to bullish, right? So this happened to get the VPOC above the Keltner channel, and so that one did actually end up working. But on the higher time frame, they're just going to work a whole lot more often, like I showed. But here, if you use the conservative way, here's the last wick. Here's where developing VPOC is. You just have to wait one bar, and you get confirmation on that bar to go short. So it still works on the higher time frame. It's just that you'll end up being more conservative than you need to be. Because on the higher time frame, you don't need as many filters. You can literally just wait for it to get the yellow line above the channel on the red bar, and most of them are going to work, as long as you know you're not trending, right? And so, like I said, in this case, you might have skipped it because you hadn't beaten this. But if you look, you did beat this one, right? Where VPOC used to be before the bigger pink one was up here. And you clearly got below that. So if you wanted to wait until this closed to be sure you were bearish, and then at this point look for a pullback to sell. So right here you're like, okay, it's definitely bearish like we talked about. Now I just need a pullback, and I want to get a sell signal. Pink bar, star. There you go. Right? Same thing. So it's just using multiple, and then there's the red bar with the yellow line outside of the channel. If you're still bearish, take that. Right? So if you identify but then, like I said, remember that on the higher time frame, we haven't been able to get. So we've got two levels here. The most recent pink, right, had this level, and the earlier pink had this level. So anything inside of here is neutral. You don't really want to be taking trades in there. You want to be taking trades through there. You want your longs to set up down here. You want your shorts to be setting up here. It's really that simple until there's sign of momentum, right? So eventually, one of these time frames, and you can see that this copies over very nicely. So it's not that I can't execute a trade down there, but I don't want to execute the trade until I've traded beyond it and rejected it. So that would be a decent short, right? This purple bar star would be a decent long with the green bar below it, right? This one, I'm probably skipping. The trap back in trade I took, good location. This red bar, horrible location to short. We haven't even reached the neutral zone yet, right? This diamond drop back in, probably good. This, I'm not going to short. Right? I need to get up here. This one you can short. This one you can long. This is how you do it when it's neutral. It's so much easier. Am I shorting this? No, it didn't breach the top. Am I shorting this pink bar purple, pink bar star? Yeah. Could I buy the pink bar that's also a star? I could because it tested down here. Do these end up being decent? They're not bad, right? I can't seem to grab this. Anything up here in the sell side would work, right? The ring bar works, the triangle works, the star works, because we were above this neutral area. Right now, eventually we're going to get into a point where we're trending right here. So this is where that kind of starts. You really didn't know it existed yet. It would have been pretty hard to take these. But once you've traded down here and you see them bounce, that's basically where this develops. And then you can start taking this, and this, and this, and this, and this. You might have taken this star and got stopped. Not all of them are going to work. That one didn't get an algo. Oh, it came back down. That one did. You got a scalp here. Rejected off the area. Could have gone bearish here. So you got to be a little careful. You get the drop back in. That's a lot more consistent. Or wait for the pullback into that area that holds, which would be right here. Plus sign takes you higher. This plus sign gets defended, and you get a purple bar star. Location's correct. Star at the correct location. Red bar at correct location, right? So am I buying this purple bar, green bar? No, not unless I thought it was bullish on the higher time frame, which it might be, right? If you look at the higher time frame, we looked at it on the candlestick chart. Like, I could be convinced that looks pretty bullish, more so than bearish. So I don't hate it, but it doesn't fit the 40 tick regime of being kind of stuck in this range prior to FOMC. Note we have a star down at the bottom of this range. That could potentially get trapped. And all we have to do is get the VPOC above it on a bull bar. So if we close, since the VPOC's already above it, if we close this bar bullish, that star is trapped and they're probably going to squeeze higher. But it needs volume to develop above it to really trap it. Notice the 13,200 level has now been pretty much established. Right? You can see it very clearly here too. They tucked back in there and then just bounced without breaking it. See that? 3,200 is right here. It's clearly being defended. So, like, that might be reason enough to take the purple bar, green bar, 2-bar combo. But, like I said, knowing that it's been swinging back and forth in here, it makes me less willing to be real aggressive here. But technically, is it valid? It is if you're bullish. And yeah, it's not bearish here. But hopefully you can see how, like, overlapping the higher time frame levels and analysis onto the lower time frame or the faster time frame really helps, like, decision making, or it should clarify decision making a little bit. Now at this point, I'm too close to resistance. If I think that neutral regime is going to continue, it's too close to resistance to be buying now. The only reason I would be getting long here is if I thought we were trending higher. Which, like I said, if that's your read, then that's your read. But I don't have enough evidence yet that that's what's happening. But it very well might. And if this closes bullish, it probably is. So if we get to 29 here, if we break this high, this neutral zone is probably no longer neutral. In other words, I don't want to be selling the next rip up here, is what I'm saying. If we break that high, I don't want to be a seller. I'd only be a buyer on a pullback. I don't want to buy the breakout per se, but I don't want to be selling anymore because that neutral only works if they reject that. So if they break to 29, and especially if they hit my initial target 30.50, like I'm not going to immediately sell that. They're going to have to reject this here, and then I can say that it's still neutral. But I'm not going to risk money on trading against the trend, right? That's just not something I do because it doesn't work often enough, and especially considering that the neutral mean reversion trade is the expectancy is like 15 points, right? The stop is only maybe 11 points, but still, why even risk like $200? Especially like 40 minutes before Fed, you know? Like, no thanks. There will be better opportunities, is what I always tell myself. In those situations, it's like, I'd love to be long here, because I could have been had I been a little bit more willing to hold on to that runner, or getting long again when it came back in. But like I said, I just wasn't prepared to go red on the day when I know that like the Fed is not something I trade really. Pre-Fed is one thing, but like I know the afternoon is pretty much out. I would rather go home with a $400 win than risk like tilting. So, speaking of, let me pull up my Apex evaluation so I can, because I'm not going to take trades in my funded account, like during Fed. No way. I don't. The Apex is doing like a 50% on what's it called, the resets. So like for $40 you can reset an account between now and next Monday. So like if I blow one up and it's an eval, no harm done. But I don't want to risk blowing up my real accounts with actual equity in them. And like I said, I don't think I have great expectancy after when what's his name, Powell is talking. So the only reason to trade it is basically just for the practice of trading fast, volatile markets and realizing that like if you do it right, you might get lucky, I guess, and have a good day. But more times than not, it's not the best place to risk because the strategy, the process I use works just fine every other hour, right? So why do I have to trade at that hour? I don't. Except for the fact that it does have wide ranges, sweeping ranges, that have the potential to pay big if you get it right. So, let me go fill up my drink, you guys. I'll be right back. All right. Rehydrated. So you can see, not surprisingly, we're lifting here. No one should be shocked to see that. And again, if it was neutral, what we should expect here is they swing up above and take liquidity and then reverse with another red bar. But I'm not, if they do that, I'm not going to short it because the higher time frame, like we looked at before, is bullish. So the 80 tick trapped this orange bar with the diamond, got above it, right? And we're now trading above pink bars, and we can't get below purple bars. See, when you get below purple bars, it can extend pretty quickly to the downside, but once you get above purple bars, it's usually neutral. And if you can get above pink bars with the yellow line, there's a chance for a breakout, right? But note you have the purple background here, right? So you can use the same concept as before. So we can say, well, it says that it's bearish, but that's only if we can get volume to stay below that level, which is like 13.210. And right now they're holding it above that. So it looks to me right here. So if this is holding, the higher time frame is potentially squeezing. Right? The only thing they could get under it was a purple bar. They couldn't even test the big figure, making the purple bar, green bar a better entry if you thought it was bullish. I was suspicious enough not to take that. I didn't think I would hold until they took liquidity. Now you can see they breached this by like a tick, and now sellers are trying to push it down. I kind of doubt they'll succeed, but they might. Like if it's still neutral, then they will reject this and bring it back down to the big figure. And that absolutely might happen. But it also might not. And then you can see on the 40 tick, it's a whole lot of back and forth, right? So mean reversion trading. But on the smaller time frame, we've had higher highs and higher lows. So the likelihood that this counter channel high is touched is relatively good. Okay, we've breached the Fiji trailing stop. So if you were short here, if they thought that it was going to continue lower, once they close above this, especially once you get the VPOC above it, that any chance of a sell continuation is pretty much gone. And now you've gotten confirmation that you've trapped this star, so it's going to most likely squeeze. I've hit my target, so if I was still in runners, I'd be exiting the trade, believe it or not, on any sign of aggression to the sell side. So like my sell would be at 30.50, and if it breaches that, or if it goes higher than gives me a red like a negative bar, I'd be out, because that's where I identified the location that I wanted to be targeting. So I'd be getting out at 13.230.25. Right there, I'd be out. Right? Doesn't mean it's not going to go higher. No, it absolutely could go higher. But this was my initial target to begin with, and that is based on the Voodoo range. Because we traded above it, trapped some buyers above it, came down, only were able to go down 1.5 Voodoo ranges, not even. And now we're coming back to it. So if it's neutral, they're going to defend this. Neutral or bearish, they're going to defend this. So it makes sense for the sellers to wait and defend only when they approach or breach this area. Even wait until they take these stops and then reverse it. So the only other reasonable spot for a target would be the high of the day, in my opinion. That also makes sense. Otherwise, this little high, this swing high here, 44, let's say 13.245, that would also be a pretty reasonable target. But like I said, I tend to use the Voodoo range levels as my targets, and that's worked pretty well for me. So where I still in the long, I'd be out here, and I probably would have made like 800, 850 on that trade, even with just that one, even with just the one runner. But holding it through, like again, I sold it here, right? Holding it through the, and the only reason I didn't sell it here is because of the big figure. But they ran it back up. It would have been very difficult to hold through this pullback. I probably see it approach my target and reject and exit right here at 20 and give up that 10 points. And then, like I said, I could have gotten long here, but I wasn't confident that we were going to push much higher than this. So I didn't think it was worth it. I thought we might get to 30.50, but I didn't see a clear path to 13.250. So for me, it doesn't mean it can't happen. It's just not what I saw. Not before Fed. Because I'm definitely not going to be in the market when the Fed decision comes out. So, yeah. I'd be out of my long now, and I'm still in calls. So if they want to keep pushing it, that'd be great. I'm considering exiting one of them. Let me see how much I'm up on the calls. Is it worth exiting? Not really. Ugh. Maybe it is. Yeah, it feels like peanuts, but what the percent, it's actually up 50%. That's not that bad considering I can get out scot-free before Fed. That might be the right decision. Sucks, but it's not what I initially planned. But I also wasn't sure. See, the problem is once the Fed comes out, the range is going to expand. It could just go up, right? And so I think it's okay to hold. As long as I don't have a lot of risk on it, it's okay to hold it. But I really planned on holding these a little bit longer. Otherwise, I would have just taken with futures. Tough call. But it wouldn't shock me if they swing it back down again. Wouldn't shock me one bit. So maybe it does make sense just to take a, what do they say? One in the hand is worth two in the bush. It's one of those situations where it's like, I didn't know if I'd really get this opportunity. I planned on holding it, but it's like, if I lost this much, am I cool with that? Because I could easily give this all back in like 2 moments, Tough call. I mean, I don't think it's bearish, but the problem with Fed is it's just, like I said, with the range expansion, you don't have very much time to think. It's just, am I in or am I out? And so maybe it makes sense just to take the 50% win and, leave the gambling to someone else. Kind of makes sense. But I even though I do think that high, the reason I'm long is that I had the opportunity to buy it at London low, and the high from 2 days ago is very poor. So I think there's a relatively good chance that we're actually going to breach that. We might not hold it, but I feel like there's relatively good chance that we'll at least test it. But I'm wondering if it makes sense to actually exit here and then buy again when we get a big dip. That kind of makes sense. Because then I don't risk giving all my profit back and taking a big loss if it just happens to breach a little bit further than I am comfortable holding. Why even hold over the event if I don't need to, So I think I might just sell it all. Like it's not what I want to do, but it kind of feels like the right move. So I'll do it. Did I get filled? I think I did. Oh, maybe not. Yes, fill. Yes, yes. Okay, out for a 40% gain on the risk. Like again, not necessarily what I had initially planned, but how often do I get a guaranteed 40% win on calls when I was planning on potentially taking 100% loss? You know, because they're just they expire tomorrow, so I wasn't going to hold them past the day anyway. And while it could just go straight up, usually, like, it goes in both directions. So even if I am thinking that the highs are likely to get hit, here, let me show you on a candlestick chart. Here's what I'm thinking. I think it's probably going to come back up into this range. I do believe that this range is going to get tested, if not breached. That's what I think. It may, though, need to break this low first. I don't know if it's going to go up, breach right away, and then fall, or if it's going to dump and then recover. I have no idea, right? So I bought right here on this candle thinking I like this area for support, and it's possible that it holds, but I expected that by the time the Fed came out that we would be around here, and that I was basically guessing about whether or not we can make it go higher or before we go lower. But now I got the opportunity to exit right here without any risk of it going any lower. And even though that's only a third of the way to my target, right? I really wanted like 150% or 200% win on that to make the risk worthwhile. The thing I realized is like my risk that it took me out before the Fed was really low, but after the Fed comes out, that risk like magnifies. So why not take the 40 or 50% now, guarantee me a win, and then if it happens to go straight up, yeah, I miss out. But if it goes down first and then finds support even lower, I could actually buy the exact same contracts back for cheaper before they actually stop me out from my original trade and trade this entire range again. So like, why not exit is the thinking. Like I said, you have to tell me if you think that's a good idea or not. If you want, I don't really care what people think, but if you've got any big feelings about that, feel free to share. But I think because we've had signs of because we've had such a tight range over the last week or a couple weeks, I mean, and everybody seems to be waiting for this Fed decision, it would only be natural to get an expansion of range. And it's entirely possible that I'm wrong and we'd never breach that high. And it's also entirely possible that we breach the high only after taking out the low of yesterday. And in both of those situations, I lose like nearly 100% of that call profit. Well, I lose all the profits and potentially all the risk, right? So rather than making $100, like I lose 300 every time that happens. Whereas the only time I really make money would be if I breach the high first before breaching the low. Which, like I said, I honestly think that that's more likely. But I don't know how much more likely that is. Because we've seen that when you get an expanding range, it's very possible to break both the high and the low of the previous week. Especially when you've been trading in a range. So, might have missed out on an opportunity, but yeah, like exiting before the Fed I feel like that's rarely a bad idea if you're at a profit. And I didn't really expect to be at a profit before the Fed, so I think it's fine. You can't really be result based anyway. Like even if it does work, it doesn't mean I made the wrong choice. because there's times when it doesn't work. And like I said, I wouldn't, like, everything could go totally fine by the end of the day, but if it breached my stop first, it doesn't matter. So I'm basically saying I no longer like the trade as I set it up. And the fact that I can get out with any profit ahead of time before the risk event is probably good. Because there's a relatively high likelihood that I'll have at least one opportunity to buy those calls back, at least at the price I got them at, if not lower. But I may be wrong about that, right? It may just skyrocket and never come back, in which case I just miss out. But over the last, I don't know, 8 Fed meetings, I can maybe remember one. I think I remember one where it dipped, but it couldn't take out the low, and then it ripped for like 4 days. Like one in the last few did that. Most of them ranged back and forth over and over again. So we'll see. But it does not look bearish, right? Oh, and then here's a red bar, right? But the VPOC of the bar before it was way down here, which we never breached. So this would be the point we'd have to breach to be bearish, and we didn't do it. So if anything, it would be buy the dip there. Or just don't do anything. Just definitely don't short it. I guess I could have held my calls until it turned bearish, since I still have another 20 minutes. But whatever. Because sometimes it really does run right up to it. And now we wait. I'm trying to think if there's anything else that I included in the video that broke that we could discuss. We talked about the green and red bars. We talked about the pink and purple backgrounds. I thought there was one more thing. What was the other setup? I thought there was one other thing I was doing new, or at least trying out. Could be wrong. I don't know. If nothing else, I think the things I am thinking of, I already did a video on it. So if you dig through the back catalog the last couple weeks, I've done a few videos on like updated setups that seem to be working well, and yeah, those continue to work. I think the main thing was using the multiple time frames to identify locations and direction or regime. Like, is it neutral? Is it bullish sentiment? And then the zooming in to find the trigger. That I feel like that is what was missing in my trading earlier in the year. But earlier in the year we had enough range where it didn't really matter because you could get 10 to 12 points on most of the setups. You didn't have to wait for the location, whereas now everything's so tight that you only get a few shots. Like it just doesn't set up very often. So, especially on the 24 tick. And the same exact thing works on the 24 tick, by the way. Like all the things we talked about. So like this green bar, for instance, is too high for me to buy. It's not underneath this, but it's potentially going to get trapped. This one is better, right? And I have to look to the left. Here's the wick to the left. So I need to get volume above this VPOC here. Developing VPOC here. Above it here, that's a buy. So on the 24 tick, it did set up. Just going to erase the lines. There's just too much. Too many lines. Does that get rid of the arrows or not all of them? Here we can extend this because this is probably going to continue. This was on the higher. This is from a higher time frame, right? This is from here. So that pink or purple, I guess, that rectangle is a neutral area that it's going to be harder to set up trades in there. This one, too many lines. So this one would have had to get price, volume. Man, I can't grab the white one. And then I gotta put this back. Is it here? No. No, I don't remember. I thought it was lower than that. Where's the VPOC? Oh, there it is. Close enough. Okay. So yeah, this one did not fire short still. Still not bearish, right? It's gotten a purple bar with the volume below the white line, but not a bearish bar that's not purple. So as of right now, buyers are giving up a little bit, but no one's really following through. Nope, the 24 tick did get a ring and a star and a red bar, but they have not gotten volume below the last wick. So if this bar, next bar is bearish, then we could say, yeah, it's bearish, right? We're probably going to support. And we did get the yellow line outside of the channel and printed a red bar at location. So this is the best short I've seen for a bit. It just didn't quite meet the requirements of getting the VPOC below the developing point of control of the last apex. So nothing to do. And you'll see that like good trading is a lot of waiting. It's identifying locations, identifying conditions, and then waiting for them to happen, right? It's no different than hunting or doing any other kind of like surgery, right? Anything that requires some kind of execution, catching a football, catching a touchdown pass, right? Throwing a touchdown pass. You don't just throw the ball, right? You need to have a plan, you need to have a play, you need to have the position right, you need to have the right guy, you need to have the timing right, and then he actually has to catch the ball, right? And you have to throw it before you get sacked. Like, all those things have to happen for that to work. But yet, if you're just an observer, it might just look like every time you throw it, he gets a touchdown or first down, right? But the truth is there's actually a lot going into that. And they're making those decisions based on all sorts of conditions. And a lot of the times, they're not getting touchdowns, but they're working towards it or waiting for the right opportunity. So while I might not be doing anything, I'm actually doing a lot because I am preserving capital until the point where I have an edge. So if I'm constantly in and out of the market, chances are I'm trading without an edge and not properly preserving my capital. That's the way I look at it. Note that ES also ran right into a voodoo range level and is trying to reverse, so that's kind of interesting. On the algo, the voodoo range levels are this dashed line, so see how we couldn't get VPOC above it on a bullish bar? When we did get above it, they closed bearish. That if you're long, that's not what you want to see on at the voodoo range level. That suggests that there's not a lot of higher time frame participation, and that the algos that just trade the NQ like 40 points back and forth all day, every day, that they're actually controlling the market, meaning nobody big is participating. Meaning we're going to easily move 40 points without anybody caring about it in either direction. So seeing price action like this, where something as mathematically simple as a voodoo range level is acting as resistance, means that whoever was participating here this morning, buying up there, is gone or bearish, right? They're either waiting for a better opportunity or they are actually sellers or just out of this market. Because here they were participating all the way beyond it, which looks like higher time frame activity. Just like these guys were participating lower than it, looks like higher time frame participation. And then someone responded to it. That was probably higher time frame participation. But then when we get back up here and they can't breach it and they sell off from it, that's not how higher time frames trade. Higher time frames don't care about exact levels. They might defend a zone, but they don't care if they're getting in at 13,230.50 or 13,235. Doesn't matter. As long as the market's going in their direction, making lower highs and lower lows, they're just a seller. Whereas the smallest time frames, they care whether or not we closed a 30-minute bar above 13,230.50. So if that stuff matters, you know that the smaller time frames are in control. And that should change your viewpoint about what kind of trades you take. Because, for instance, the mean reversion trades that trade the channel back and forth, those are going to work great when the higher time frames are not participating much, but they're going to suddenly stop working and bulldoze you if the higher time frame is participating a lot. And then the momentum trading, breakout trades, stuff like that need big orders to go through to support higher and higher prices, those are only going to work if you have higher time frame participation. And now higher time frame participation is expected to show up shortly. Speaking of which, maybe I'll take one more break and see if I can use the restroom quick, and then I'll be ready, because in 5 minutes he's gonna come up with a decision. So here, I'll run to the restroom and come right back. Hold on, guys. All right. Got myself some more caffeine. If I haven't made this blatantly clear, I'm not recommending that anybody do anything, right? I primarily do these videos as a review journal for myself. So if I say any times you can do this, I'm really talking to my future self. I'm not suggesting that anybody actually trade anything. You can lose a lot of money trading futures. You don't want to trade with anything you are not willing to lose, right? Particularly true when there's a big event like the Fed decision coming up in 3 minutes. So oh, that's funny, my friend. I did the same thing. All right. My friend CL Trader is also out of his calls. That's good to know. I had the exact same feeling. Let's see there. Just interesting. Even Froggy Trade has that butterflies feeling. I kind of agree. It's like it doesn't. I don't know. This is one of those situations where I don't know what's going to happen. You never know, but I don't have a good read on like the higher time frame. I don't have a good read on what to do about this. Other than being pretty confident that we're going to leave the area, I don't know confidently. Like I said, I think this looks like it needs to get cleaned up, and this low looks very vulnerable to me. Probably gets broken, but I don't know about this. I don't know if we're gonna get down here, right? Like, it's hard to imagine. But then we do have single prints. Like, I would not be shocked to see a big drop. But what I think might be going on, I think we might actually take out these things up here, and then I would have exited my calls, and I've actually got some longer term stuff that I'd probably exit if we do that, or at least trim. And then we may come back down and rip through here on the what's it called, the press conference. So I'm not saying that's what's going to happen. I'm just saying that's kind of what I expect. See how we're stuck inside of this consolidation here? It's the same value area. This to this is basically all the same value. So we can easily, in one blink of an eye, go from one side to the other. This whole range of today can just absolutely get like blown away easily. So be prepared for that big movement, and then realize that once we start moving on the algo, it's good to see that. It's just boom on the algo. We're gonna not be able to process what's going on the 15 tick for a while, because it's gonna go so fast. So just chill, right? You can use the higher time frames. Watch the higher time frames and make and because those will be printing slower, right? This is the highest time frame. That's the 40, and then the 24, and then my main one is the small one, the 15 tick. But this small one's gonna print like 4 bars in a row. So. They did raise 25 basis points, which was expected. Okay. And they did raise rates. You can see the initial response was to go higher. Let me just peek at this. So we went higher. We banked off of this 13,272 voodoo range level, which is also support from this previous day, and they rejected it initially. Remember, these levels are primarily like intraday algo based levels, like high frequency traders and stuff like that, market makers. Those are the ones that kind of hold these levels. So this is not necessarily as high as we're going. Just because it tapped that and released, it doesn't mean it can't break it, right? It just means that there's some resistance up here. But if we break through it, it could become support. On the other hand, if it does hold, that says that the bulls are not doing much, because they should, if there's interest in going higher, they shouldn't have much trouble like running through those. So let me see, quick read the release. Modest pace of economic activity in the first quarter. Job gains are still robust. Unemployment remains low. Tighter credit conditions, that's new, are likely. Tighter credit conditions for households and businesses are likely to weigh on economic activity, hiring, and inflation. So, but the extent to that remains uncertain. That's a little bit more or a little bit more, what's it called? They're expecting like some sort of lag from their effects. So that's actually like bullish. It's dovish potentially. It's saying there might be a recession coming, so maybe we'll chill out, right? In determining the extent to which additional policy firming may be appropriate to return inflation to 2% over time, the committee will take the account, and then everything else is the same until the end. So the only thing they changed, they took out, the committee anticipates that some additional policy firming may be appropriate in order to attain a stance of monetary policy that's sufficiently restrictive, and to return inflation to 2%. In determining the extent of future increase in the target range, committee will take into account cumulative tightening of monetary policy, all these other things. Now they're saying, in determining the extent to which additional policy firming may be appropriate to return inflation to 2% over time, the committee will take into account the cumulative tightening. So it's a little bit of a language shift from they took out the may that it may be required or whatever, and just says that in determining what's next, they're gonna take into account all of the data, right? But it's basically not giving us any new hints to whether or not there's going to be another one or not. But they did take out the language that suggested that they may be increasing it, and then they added something saying that the economic downturns, some kind of tightening in it may be coming. So they're anticipating that all of this tightening may actually affect the economy, which that sounds pretty dovish to me. It sounds to me like they're saying, yeah, well, we definitely wanted to do this one, but we're not even sure if we're going to do another one. And it's probably going to depend on whether or not hiring decreases, if GDP changes, if inflation continues to go up. Like, it sounds like there's a chance that they are done with their interest rate shifts, but they are open to they're saying additional policy firming may be appropriate over time, but they took out the part where it said the committee anticipates that they will need to do that. So it sounds like that's kind of hinting towards the fact that this very well might be the last hike. Now, you'd think right away that that's bullish. That's the last hike. It must be bullish. The hikes will stop. But what the market wants to know is when's the cut coming, right? And if the cut's not coming soon, and we might have economic downturn from all this hiking, there might be some concerns of inflation. Of recession. And so the reason the Fed is saying that they might not raise interest rates more is because they're concerned pretty much that we're going to go into a period of recession. So that's not necessarily bullish, but there might be some participants who were not wanting to participate bullish in equities because they were afraid that rate hikes would just go higher for longer. And now it looks like it just might be rates stay here for longer. So there's no hints of cutting interest rates, nothing like that. And basically saying that everything's robust and good, economy's on track, but inflation remains too high, and they're basically going to wait and see what the data gives us before they decide what to do in the future, but that eventually they may need to hike some more, that there was nothing about cutting interest rates. So for those who were hoping for some crazy hint that Powell is going to cut interest rates next month or something crazy like that because of the bank failures. They're now disappointed with that. But I think there's a lot of bears who are saying interest rates are going to go to 8% and maybe we're going to get like a surprise interest rate hike, or maybe it'll go 75 basis points next month. Anybody who was super hawkish got, ice cold water poured over their head, because what Powell's basically saying is exactly what he's been saying, which is we need to fix inflation, but we know that there's a lag to what we do, and we're going to wait to see what the data tells us to do before we make any more decisions. Last month he said we may, we'll likely need more. Now he's saying data will determine if any are required. So I'd say it's dovish. And at least it suggests that this hiking cycle may be coming to an end. But I think there is some reality. There's a reality check that without data, we're really not going to know. But I think if there's people who are short, hoping for some big surprise change, it didn't happen. So, and then you can see that the market's responding with pretty. It's a pretty gentle response, right? We broke the high of the day today, and then we tried to break the low and we couldn't, right? We didn't even get below we basically came back to the entry that I had earlier and bounced under 13,200. So right now the market appears. Oh, and then if you look at this range right here, right? You look to the right. We couldn't close a candle below this consolidation range, which is pretty bullish for the moment. So this candle still has an hour to go, but the 30-minute, it could not close a 30-minute below. So unless something changes in the press conference, at the moment it looks like bears are just more stuck. But like I said, that press conference can have all sorts of effects. And there's still 21 minutes basically left of this 30-minute candle. And if they do take out this low and close it, they might target this one. So you can't make a decision. When it comes to candles, you really can't interpret them until they're closed, right? Just like the Renko bars. And the problem is, if you're making decisions based on 30-minute candles, it means there's really only one decision to be made every 30 minutes. So you could jump to the 15-minute, but we haven't really had any big closes above. And like I said, that level, that voodoo range level, that holding suggests that the smaller time frame traders are in control up there, which doesn't really match with the idea that everybody's now going to say, yay, the Fed is potentially done and now I'm going to buy stocks. Like that high should have broken then. So like I said, macro-wise, big picture, I don't think it's that bearish. I don't think there's any reason to short the market at all on a higher time frame. Then again, when you look at actual price action, you say, well, if that's the case, then why aren't they pushing through this without any trouble? Why haven't we seen a range expansion to the upside? And when they did try to put it up there, why did the overnight range from like Monday night, why did that Monday night range act as resistance at this voodoo range level when that was just like a swing low and now it's a swing high? Like it doesn't fit with the idea that higher time frame is supporting this move up. So when things don't make sense, when the two don't match, the easy thing to do is just to wait. It's a sign of indecision. The market's not sure what it wants. And so we just kind of want to hang out, and we could continue to mean revert, perhaps. And you could continue to use this neutral zone and all the other setups that we were talking about. Or you can just wait, which I think is the better choice, and not trade when you don't know what's going on, and basically wait for more information. The market wants to hear from Powell, and he wants to probably hear him answer questions about interest rate cuts. So what I'm going to do now, I don't think I'll get in trouble for this. I'm going to try to pull up his talk. FOMC live. Let's see. Here we go. So you guys can follow along here if you want. I'm just pulling up. This is like a government website, and it's just the broadcast. So this way, now I'm not using it to make decisions. I want to make that very clear. I'm not like trading based on what I'm hearing, but it can be helpful. First of all, to know when he's on and when he's done. That's the most important thing. But also just to get a sense of if the market is responding to his comments, like what does it? Is it something that has lasting? Is it a different? Is it different information than what we've known already? Because that's going to have the potential to include higher time frame participants. So, like I said, I'm not usually trading right after this. This is not. I don't really think this is kind of like throwaway junk time to me because it's everyone's just waiting for the press conference, right? We have the release, we have the decision, but it's just repositioning prior to the press conference that starts in like 10 minutes. So, like you might get a scalp, but it's pretty dangerous. This is a better time to watch and analyze and determine your plan. Note we did come down to the other voodoo range level and rejected. So we basically just set up a 2 VR range, low and high. And then they're gonna try to break either one or both of those. So it's continuing to say indecision, big doji candle potentially if it closes in a minute here for the 15 minute. Identifying like the range. Now the good news is that does suggest that we're going to expand range, right? Because we got to break one or the other. So that's the good news is that from a trader's perspective, getting a wider range than we've had all day, it would be really, really useful because it means that more of my setups will end up paying me because these 4 to 5 point ranges are just, I'm so tired of 15-minute candles only going 5 points, you know? So if we could get some 100-point 15-minute candles, that will make making money trading a lot easier. But what we don't have is really any clues to which direction we're going to go still. And keep in mind, were I still in calls, I'd probably still be holding. We've not broken yesterday's low. No reason to think that it's bearish. Nothing macro is bearish in that statement. And honestly, right now I'm looking for opportunities. I've got my broker ready to go. If we dump, I'm gonna buy him back. To be completely honest, that's what I would prefer. Is just buying them back cheaper. We'll see. I don't know if I'll get that chance, but if he answers a question and it's and the answer is bearish, right? And we get a big drop, then I will look for an opportunity to actually buy that drop. But it has to set up on the algo. just because he says something that affects the market doesn't mean I just buy it. It has to actually set up bullish on the on the algo. So I'm getting the option trade ready in case I get the opportunity, but I might not. They might just lift it, right? Like that might have been my chance. This might have been the low to buy. Right? We got blue, and then diamond. That's a pretty good, and then star, and then lift. Straight up. So it may not set up again, and that's just the way it goes. So, but like I said, I'm ready to buy calls on a dip. I'm not going to buy a breakout in this environment. And I'm definitely not going to short. Okay, so we're now breaching that previous high. If you look at this, see how we're getting over this high here from 15 minutes ago? And then we're also getting over this high. But nope, this is the high of the day. And that's what matters. But this one is what I was talking about. This high, people are going to see like a head and shoulders kind of pattern here. Right? So if this rejects and they take the low out, that's pretty bearish. Because again, this level was a VR level, Buddha range level. Here, I'll show you. So this, oh, did I not even put it on there? 13,272. How did I not get that on there? $13,272. Oh, I see. I'm not high enough. There it is. I was like, I'm pretty sure I have it. So it's not copying from which one? Let's see. 845. Let me see which one is wrong. Something's missing here. Chart drawings. 845 is missing. Does that fix it? There we go. I was like, where's the voodoo range levels? Okay, so now I've got all the levels on this time frame too. So you can see it came right up to the voodoo range level, couldn't even put any volume above it, and then just rejected it. Came right down to the voodoo range level, couldn't put any volume below it, rejected it, right? So we are trading as if there's no higher time frame participation. It's just small time frame intraday algos passing the ball back and forth, 80 points back and forth, 40 points back and forth. Right? And that it's a sign that nobody is interested at this level. It probably means we're going to leave the area. Anyone who wanted to be long or short from here has already done it. And the only way we're going to get higher time frames with the big money to participate is if we break out of this range, which is, like I said, great news for day traders. And if I had to guess, I'd say we're probably going higher, but I'm not gonna chase it. But if you were looking for a long down here, this is where you'd want to look, right? We'd look down at that area, and if you look here, we did get the setup. We got blue bars indicating that volume was having momentum to the downside, and yet we knew it was bullish. So breaking back above them is pretty strong. And then diamond followed by triangle up, or a blue arrow means that any other dot can basically be bought. And then also a diamond with a dot followed by a triangle up is an immediate long. So there were lots of ways. If I was willing to trade during like this period, there were ways to get that trade. I just didn't take it, right? Like it doesn't, and I'm okay with that. I just made the decision that I wasn't gonna participate in this because it's just usually throwaway time. Like whatever we do here is going to be totally meaningless in like 15 minutes. So it doesn't mean you can't trade it. I just don't. Although my read was right, and that's good to know. And I suppose it's not horrible to maybe just practice trading in the Apex account, but yeah. So you can see we have yellow and pink, right? So we can use that other trick I was talking about where here's the VPOC from before this pink. So really we don't want to be bearish unless we can get under 17. We need to get under 217 to be bearish. Oh, this one's pink too. Yeah, 217. So it's bullish, but it could go all the way back to 13,217 and bounce and still be considered bullish. There's really no reason to short unless that can be. Now, if you want to target that area, that's just a counter trend mean reversion trade. It's just that's pretty dangerous when there's a potential of a big trend. But if you have a level like a voodoo range level up here, right, and we got up there and rejected it, and you wanted to target the developing point of control, I'm okay with that. But realize that it's probably not going to work 50% of the time because you're counter trend trading. So like I would not take drop back in. I would not take, there's really no sell I would take, honestly. That's not really my style. What I would rather do is wait for bears to get trapped and then buy it with the trend. So like this arrow here, I would expect that to get beat. But if it doesn't, you might be able to, the conservative way to trade it would be to wait for a pullback into that range and then get a triangle down. But I'm not going to sell right here. Again, I just don't find that that's very, I don't find that that works out often enough for me to make it, to do it all the time. I really wanted a bigger dip. I was all ready to buy those calls back, but it's not that I don't want to pay more for them than I did before. It's just that I want to be able to manage risk appropriately, and I just haven't seen anything that looked like a significant dip yet. So I'm waiting. But it looks to me like everybody kind of agrees that there's just no reason to sell this. And they might just keep pushing it. So like this, so now we got pink. Oh, we already talked about that. The VPOC is all the way down. So we're waiting for volume to show up here. There, pink. Still, VPOC has not shifted up. So there's no reason to sell. Now we have a pink bar with yellow outline, meaning that volume is also showing momentum, right? It's making higher highs and higher lows and pushing, getting a little bit overbought, if you will. But if it's trending, that's bullish. And it is trending, right? We've got pink in the background, meaning that price has also got momentum. So there's no reason to sell this whatsoever. If anything, this is when the breakouts actually work. So if you were waiting for an opportunity for a breakout, this is what it looks like when it breaks out and works. And I will happily stand here and watch it go without me, without getting upset at all. Because, like I said, this is not my wheelhouse. Yeah. This is not the place I make my money. Like, someone trades this way and that's cool. And if that's you, that's great. But I don't generally trade into expected event. But all this is, from my perspective, is people repositioning. They don't want to be heavily short right before he starts talking. But then the longs are going to eventually take profits too. So now look, we did put a white bar above the voodoo range level, but it's got a yellow outline, right? It is susceptible to getting trapped, but to do so, we need to get under the one that had the first yellow outline. What bears need to happen is they need to get some real volume up here. They need to shift volume up and then get below it. Well, the volume point of control is all the way down here, right? The dotted line. So until that shifts up, this whole area is like illiquid, basically. And it's going to be really hard to guess which one of these is going to drop. We did get a red bar outside of the channel on the 15 tick. And it does look like that is getting some expectancy. So that's something. Back to the bottom of the channel. If this is continuing to be bullish, this will be like a star or a green bar, and then it'll just continue. You can see we're retracing these yellow bar ranges, the range of these yellow bars, where the yellow bars started right here. So right there, now that one's got a dot on it, and when it's green with a dot, it usually does not immediately lift. It might go one bar up, but it's probably going to need a little bit of a pullback. This low usually gets broken when it's got a dot and it's green, because it means volume shifted up, but there were more sellers than buyers in here, and they usually defend that. Sellers will usually defend that bar. So I do not I would not buy this. When I saw that, if I was in it, I'd be out. That is not a bar that tends to get a lot of immediate extension. It is a good sign if they hold it, though. If they can pull back, test below it, and hold it, it's very strong. But it would be very rare for this to get any more than 1 or 2 bars higher. The only reason they would is if it's squeezing. So if I was long here, I would definitely be exiting. They do squeeze. So they get behind this red bar. But no, volume has not shifted up. We don't see that dotted line yet. There's really no reason to short. Okay, we get another pink, but VPOC is still way down here. Nothing to do, right? Except for maybe buy on the pullbacks. So I wouldn't have bought that one just because the setup wasn't what I wanted. but now I've got an arrow here. So if I can get a pullback into there and a blue dot, I'd take it. If it wasn't right before the Fed. If it was any other time, I'd take that trade. The short would be yellow arrow, yellow dot, triangle down, red triangle down, but I wouldn't do it. I wouldn't short this. It's probably going to go all the way to my target that I wanted before when I had the calls without giving me a chance to get back in, and that's fine. At least I still have my core position long, and I'm not short. That's what you got to remind you. If you feel frustrated, that you're like FOMO, just remind yourself that, hey, I knew well enough not to be on the wrong side of this. I had an opportunity to get long. If I want to go review that and reconsider, I can do that anytime, but not while I'm trading. So I'm trading, I'm waiting for my opportunity, and that's all I can do. Make decisions based on the information I have, and I did. You can't be results oriented. And just remember that once he starts talking, the chances for range expansion increase significantly. So we shouldn't be shocked to see a big long liquidation right as he starts talking, because a lot of people are just trading this as like a game of chicken. Okay, pink, but VPOC has not shifted. It's still way down there. More than a VR below us. Like, that's weird. Oh, this is also pink. Yep, even on this time frame, way down here. So, nothing to do. Too far away to expect more than 6 or 7 points to the short side. Not worth risking. Okay, there's my yellow dot. So, I've got arrow, yellow dot. So, if this was a triangle down, it's technically a short signal if you don't think it's bullish. I do think it's bullish, so I wouldn't take it, and it doesn't print anyway. No triangle, nothing to do. This dot probably gets stuffed. We probably get above that. Now they're testing below this. This is what we wanted. This is what I mentioned. These often don't hold until they test underneath it and reclaim it. When it's green with the divergence dot, we need to test below that and trap back in. Now, the trap back in can be very strong. Trading right into that old resistance, that voodoo range level. But if they can push through this, it can take the high again. Note this red was definitely outside of the channel. Oh, and on the higher time frame, they had a red outside of the channel. Yellow got all the way up here, closed red. That's on the higher time frame. That is a consistently good scalp to the downside. So all of a sudden, if you were looking for longs, you might want to chill, because on the higher time frame, this is meaningful. It's got to be really bullish to break that. We have seen it happen. It happens when it's really bullish, right? We know it can get bulldozed if it gets bullish enough. But note how the voodoo range continues to act as resistance for the moment. We did get the trap back in. That is totally a valid signal. You can buy it. Here comes Powell, right on target, right on cue. Just as they try to lift it, he comes out. Yellow dot, triangle down. That would be your short if you were bearish. I'm not, so not going to do nothing. How do I make this louder? What did I do? Oh, I see. He's not actually out there yet. They just went to the live stream. Okay. He's not out there yet. He's a little late. I thought he was coming out. So this drop back in. Stop. There he is. That ring, if it's followed by a triangle up, is usually pretty good, but it needs the triangle to confirm. Nope.
Before discussing today's meeting,
that's bearish.
Let me comment briefly on recent developments in the banking sector.
Dot, triangle down.
Conditions in that sector have broadly improved.
Shouldn't be a surprise.
And the U.S. banking system is sound and resilient.
U.S. banking is fine.
Continue to monitor
it's
conditions
fine.
in the sector. We're
Purple.
to learning the right lessons.
It's got to get above this.
And we'll work
again, this is going to start going pretty fast. So
from happening again. As a first step in that process,
it's good practice.
last week we released Vice Chair for Supervision Barr's review
Bearish unless we get
of
a
the Federal
volume above
Reserve's
this
supervision and regulation of Silicon Valley Bank.
on this time frame.
The review's findings underscore the need to address our rules. and
Note
supervise
the higher
banks
time frame
to
red
make for a
worked.
stronger and more resilient banking system, and I'm confident that we will do so. From the perspective of monetary policy, our focus remains squarely.
Okay, this should not be a surprise. We're getting a nice pullback as everybody kind of repositions again.
My colleagues and I understand the hardship that high inflation is causing, and we remain strongly committed.
Okay, if you want a short, you want to get a pullback and then a sell signal
Price stability is the responsibility of the Federal Reserve.
like that, right
Without
there.
price stability, the economy does not work for anyone. In particular, without price
See how
stability,
VPOC
we will
shifted
not
down?
a sustained period of strong labor market conditions that benefit all. Today, the FOMC raised
Trap
its
back
policy
in.
interest rate by a
See
quarter
if that
percentage
fails.
point.
It should.
Since early last year, we've raised interest rates by a total of 5 percentage points in order to
So
attain.
if this trap back
monetary
in
policy
works,
that is
it's
sufficiently
not
strong
bearish.
to return inflation to 2% over time.
VPOC has shifted
We're
down.
continuing to reduce our securities
Okay,
holdings.
the sell stops
Looking
out,
at
the short stops
a
out,
independent approach
and
to
the
determine
and
the
this
extent to
bullish
which
move
additional
works.
policy
That might be the only dip we get. Believe it or not.
I will have
That might
more
be
to
it.
say about today's monetary policy actions after
I was
we
not
review
aggressive enough
economic
to take that.
The US
That was not much of a dip.
significantly last year, with real GDP rising at a below trend pace of 0.9%. The pace of economic growth in the first quarter of this year continued to be modest at 1.1%, despite a pickup in consumer spending.
That's
Activity in the
supernova
housing
now.
sector remains weak, largely reflecting
So
higher mortgage
these trap back in trades will start to work to the upside. Note we're above the VPOC, developing VPOC, but not above this one. Not above the old one. This can still be resistance. And if you want to be conservative, you wait.
3 months of the year, job gains averaged 345,000 jobs per month. The unemployment rate remained very low in March.
This would be your target on all those buys. If you bought this, your target's
There are
here.
some signs that
And
supply
honestly, that's
and
close
demand
enough for me.
Are coming back into better
But
balance.
your target would be here.
The labor force participation rate has moved up in recent months, particularly for individuals aged 25.
Note we're right in the middle of the channel here on the higher time frame, so you can get a lot of
Some
chop
signs of easing
in
and
here.
job vacancies have declined so far this year.
Yep.
But overall, labor demand still substantially exceeds the
Plus,
supply of available
yellow
workers.
dot, no triangle, nothing to do. Too bad.
Inflation remains well
Just
above our
it just
longer run
gave away.
rate.
As soon as this is the problem with trading during an event like this is
Total PCE
it's going to move based on what he says, not just the price action. Okay, there's your trap back in. That was actually valid. I could have taken that long.
PCE prices rose
I did not.
4.6%. Inflation has
I'll take
moderated
it.
somewhat since the middle of last year. Nonetheless,
It may
inflation
stop and it may
continues
stop
to run
fast,
high,
but I will take it.
and the process of getting inflation back down to 2% has a long way to go. Despite elevated inflation, longer-term inflation expectations appear to remain well anchored, as reflected in a broad range of surveys.
Almost stopped
from
me.
Households, businesses, and forecasters, as well as measures from financial markets.
And it stopped. Okay, that's how it goes.
Guided by
Stopped.
Our mandate to promote maximum employment and stable prices.
Got yellow line below the low. So now it's bearish, right? I was hoping that might be a dip to buy. I did it in the Apex account because it's, Fed. But that was a turn I was not expecting. That should have worked if it was bullish. Now we can really only be bearish. We've traded underneath that important level.
Risks that high inflation poses to both sides.
And we're
of the
back
mandate.
into, what's this zone here?
To our 2%.
Back into the neutral zone here.
At today's meeting, the committee raised the target range for the federal funds rate by
The previous neutral zone. We're back inside of that daily zone
range to 5 to 5.25%.
where we were all day today.
And we're continuing the process of significantly reducing our
Oh, come on
securities
now.
holdings. With today's action, we have raised interest rates by 5 percentage points in a little more than a year. We are seeing the effects of our policy tightening on demand in the most interest rate sensitive sectors of the economy, particularly housing and investment. It will take time, however, for the full effects of monetary.
Okay, note on the
restraint to
candlestick chart,
especially on
we
inflation.
came up to the voodoo range level, tested above it, and rejected it, right?
In addition, the economy is likely
It's a
to
sign
face
that there's no
further
interested parties on the higher time frame
credit conditions
buying
have
here. It's
worsened
not what you want to see if you're
last year or
bullish.
so in response to our
Okay, we did not
policy
want to
actions
get
and softer
this
economic outlook.
trap because they tried to buy it and the smaller time frame traders were able to reject them.
appear to be resulting in
So
entire credit
that's not a good
crisis
sign.
across
If you
all
were
businesses.
thinking it's bullish, it's not a good sign. If you thought this was getting tested, that's not what you want to see. So now we got to see what happens when it tests underneath this. It's almost certainly going back to that low. Like I said, the only way it could have really bounced is where I bought it. That was really that was the best opportunity. Back up here. This. Once it tested below this, it needed to bounce. Now I could have avoided it because I had the VPOC above me and it would make sense to wait until that's breached. I was aggressive and took the trade knowing that that's the only one I really need to try. Because if that fails, it's bearish. I could have actually flipped short when that fails. Okay, purple. But the VPOC is way up here.
Meeting by meeting,
right?
Based on the totality of income.
VPOC's way up here.
Other implications for the outlook for economic
We're pretty deep in the hole to short.
And we are prepared to do more if greater monetary policy restraint is warranted. We remain committed to bringing inflation back down to our 2% goal and to keep our longer-term inflation expectations well anchored.
Okay, he mentioned something about
Period of below
maybe doing more, and suddenly they ripped. I probably should have bought calls
restoring price stability is essential
because we tested below that level and we
for
bounced.
achieving maximum employment and stable prices over the longer run. To conclude, we understand that our actions affect communities.
And there it goes. Yeah, I missed it. That was the dip. I got a little bit sidetracked and missed it. They if you look, they dipped right below that low
Maximum employment and price stability goals.
and bounced. And that was the buy. I didn't have see the marking here, the orange, and then the dot got beat, the purple got beat, and we were way far away from the VPOC. So that's your target. And it was just a little bit too fast. I was trying, but I didn't get there in time. I could have taken it in futures, but I wanted the call, so I was just too short to get fill. It just didn't fill. Okay, that's actually a buy. See how fast this is going? But that's a buy. I'll go ahead and give it a try. It may not work. It's an apex evaluation, right? Like if it doesn't work, it doesn't work.
Today, our decision was to raise the federal funds rate by 25 basis points.
There we go. Paid. See how fast that is?
A pause was not made today. You will have noticed that in the statement from March, we had a sentence that said the committee anticipates that some additional policy firming may be appropriate. That sentence is not in the statement anymore. We took that out. Instead, we're saying that in determining the extent to which additional policy firming may be appropriate.
We're right at resistance. I don't know if I'm going to get my runners to pay, but I did get my core off.
Certain factors. So
Everything he's saying is very dovish.
We're no longer saying that we anticipate. And so we'll be driven by incoming data, meeting by meeting. And
So they don't think they're going to raise rates anymore unless we have bad data. That's what he's saying. Or good data, I guess. That's pretty bullish if you ask me.
So
If you're a macro trader and you were short, your hopes and dreams just got crushed. So
that's not my own most likely case, which is really that the economy will continue to grow at a modest
And I am still long.
this year.
And I have not covered the other two. I am waiting. I am holding these as long as I can.
That's my own assessment of the most likely path. Staff produces its own forecast.
I will take one more. I took 4, so I will take one more.
Reserve Bank presidents, of course.
And then I'm going to hold the other one as long as I can.
The staff is writing down.
I'm long. Do I want to? I got to decide. It's going to be quick. If it dips, it's going to be quick. Oh, they did cover it. Okay, I got one left.
The staff and
I guess I had a target in there that got hit, but I wasn't watching.
have different perspectives.
Nice. I wish I had calls, but oh, come on. It won't let me go any higher.
This was for a mild recession, and by that I would characterize as one in which the rise in unemployment is smaller than has been typical.
Okay, right to the voodoo range level and rejected. See that? Right to the voodoo range level and rejected. It's not bearish per se, but it suggests that the smaller time frame traders are trying to protect something, right? They're trying, but they're doing it against a trend. It's probably got too much momentum to hold that. I would expect this to get broken and to capitulate.
From Washington Post. Thanks for taking our
If it doesn't, it's not
We
ready.
can talk about the account of possible effects of a debt limit standoff.
Now they're talking about the debt limit standoff. That might do it.
But do you see
That might
the
be it.
economics effects of even getting close to a default, and what
This might be a good opportunity to buy calls if it dips here.
So I wouldn't want to speculate specifically, but I will say this. these are fiscal policy matters for starters, and they're for Congress and the administration, for the elected parts of the government to deal with, and they're really consigned to them. From our standpoint,
So I'm still holding that runner.
it's essential
That high did not look very significant to me, and we have still not broken that poor high at the top from Monday night. So I have no reason to think this is bearish. As far as I can tell, on the higher time frame, there's really nothing up here. It was a previous point of control that we rejected off of, and it touched the Voodoo range level and rejected. But like I said, it's trying to fight a trend. It's not. That's not what those are for. You don't fight trends at the VR levels. Those are short-term trader algo levels. If it does work, it's not going higher. But they should be able to blow right through that. If they can't, if they break under this yellow and it's not a purple bar, I'll just have to let it go and be happy with like $100 win, because I took that stop earlier, unfortunately. So
that we never get to a place where we're actually talking about or even having a situation where the U.S. government's not paying its bills.
but it'll still be a $1,000 win on this trade. It'll just
Did that affect today's monetary policy decision at all?
P&L on that account, that eval account would be not positive.
To the outlook, and that will
Okay, we have not. Still purple. We're gonna hang out for a second.
I wouldn't say that it was
Shit.
in today's,
Look at all those purple bars. They're gonna need to reverse this. Otherwise, they're gonna stop me.
Oh, thank you.
Yep, stopped. It went through the. So it stopped me when it made the yellow bar, yellow line on a non-purple bar. It stopped me out. So I'm unfortunately gave back $700 on that one runner, which sucks, but that's the way it goes. If you're gonna trade Fed, you got to be ready for those big. I mean, that's a huge drop, right? Almost 100 points. But it was my last runner. I already got 3 off. I was gonna hold the other one, and it went beyond my buy point and got all the way. And I would have been able to get out earlier if these weren't purple. But that could have turned right here. But once it closes bearish with the yellow, I'm yellow below it, I'm
It was a
done.
general presentation. It was an informational briefing of.
So I held that one literally as long as possible, which is what I've been working on, is trying to be a little bit more conservative with my exits.
And
I didn't do very well before. Well, I did the best I could, I guess, but this one clearly signaled to get out. But unfortunately, it didn't do so until under my buy, so I ended up getting back.
That I recall anyway about the risk of a bank run. So.
And they're talking about bank runs and stuff. So maybe it's interesting that they knocked on the door at that VR level, and there were short-term sellers waiting there, and nobody responded on the buy side. It's very, very, very weird.
As an informational, non-decision.
If it's bullish, that doesn't really make any sense. If this is a bullish trend, that's not what usually happens. So suddenly, I'm starting to think we may not be in a bullish trend.
Are attending to liquidity and taking opportunity now, really,
Because that's very weird.
of early March to build liquidity.
Yeah, that. I mean, I guess it might have just been a happenstance, but yeah, that
It's very useful.
should get broken. I can probably try one more time, but
I mean, I think in this particular case, we have found that
it better be a good setup. Double divergence,
and the financial stability tools are not in conflict. They're
green bar. Yeah, I don't. That's not good enough.
our financial stability tools.
It might just rip right back up. Like that level should not have held.
At the same time, we've been able to.
But the ranges have expanded so much because of Fed. It's hard to read. So, but because look at how much they can do in just like 2 words he says, and it just goes up 30 points. So
The staff report said SVB
they may just be stealing liquidity, and that happens. That's the risk.
and it said banks with large unrealized
They just pushed it a little bit too far that I couldn't quite hold it that long
Well, I mean, I didn't say it wasn't a
because it looks bearish at that point.
Something that they're working on, and that they're on the case that they.
And I don't have the confidence to get right back in it as soon as we see a sign of aggression to the upside, because that shouldn't have
So I think that was also.
caused this drop unless it's not bullish.
Yes, this is a bank, and there are many
It may be neutral,
experiencing this thing,
but
and we're on the case.
this trend looks suspicious. And then you can see this was pink. It's like I said, it was going kind of fast, but technically it's not bearish unless it gets volume below this, right? So you could have bought this on a very high time frame Like I could probably still buy calls, as long as they hold 13,220. But if they develop volume below 13,220, the sellers are going to have an easier time than the buyers. I just don't like how that rejection happened. That's not what usually happens during a trend up.
There's been consolidation has been a factor in the U.S.
Look at that, right off the VR level.
Really since interstate banking. And
So intraday traders, like algo traders, the high frequency traders, are able to hold these levels, meaning that
that's going on.
the buyers aren't actually from higher time frame. They're just it's like FOMO chasers chasing momentum. There's not actually any fundamental buying there, which is not what I expect. But that's why the voodoo range level is very helpful. And I probably could have sold it a little bit earlier. I could have been a little bit more conservative with that one that I did have. But I really, like I said, I've been practicing just letting it go, because you saw what happened earlier. And with it's usually not this kind of range, but I guess with Fed, maybe the smarter thing would have been on the first sign of weakness to go ahead and exit it. But I got a little bit, I just got a little bit stubborn with it, and it looked bullish, so I was gonna hold it. Okay, we got purple bar. Can we get a star here? It looks like if it closes bearish, it's gonna be a star down. That's very weak.
As you know, there's an exception to the deposit cap for a failing bank. So it was legitimate, and I think the FDIC, I believe, is bound by law to take the bid that is the
Okay, purple right here. So as long as this holds, it's bearish. Get VPOC above that, and you don't want to be shorting anymore. They're trying to do it right now. So get to 53,
we don't want the largest banks to be,
and it's not necessarily bearish. But if it holds 53, you don't want to buy.
There's an exception for a failing bank, and I think it's actually a good outcome for the banking system. It also would have been a good outcome for the banking system had one of the regional banks bought this company, and that could have been the outcome. But ultimately,
So if anything, it's a sell here, but you're trading right into that grind zone. So I don't know if it's a great idea, but it's technically a sell if it can get to 40. If it gets to, if it gets above, like, oh look, the volume is not above it. There we go. Now if it gets to 53, it's clearly not bearish.
Could be equal to one or more rate increases. So given developments since then, how has your estimate changed?
Oh, there it is. That's technically a sell. Let's try it.
I think I followed that up by
It's a little bit,
It's quite impossible.
There we go. I got paid on the sell.
To that effect. But in principle, that's the idea. You know, when
V-
we've been raising interest.
So I'm
rates,
short.
raises the price.
See, and if this VR holds, I don't want to be short anymore. Nope. Going lower. Let's see if I can get one more cover.
Mechanism. And you know, when banks raise their credit standards, that can also make credit tighter in a kind of
Oh, look at that.
way.
Just huge ranges. That sucks. So freaking impossible to like manage risk there. I'm still short, but now I'm looking for an opportunity to get out. Basically,
Ultimately, we have to be.
it technically didn't stop me on my runners, but
Our ability to make a precise
that's
assessment.
the range is just so fast. Speed is so fast and range is so high. It's just difficult to manage the trade, which is why it's not a great idea to trade with real money here. But I'm doing it with the eval, so I'm just
In principle,
letting it do its thing. Okay, pink bar star. That should go lower.
we would have had this not happened. The extent
There it
of
goes.
is so hard to predict because we don't know how persistent these effects
Still
will be
short.
and how large they'll be and how long they'll take to be transmitted. But that's what we'll be watching carefully to find out.
And just to quickly follow up, what does it suggest about the scope for the committee to pause rate increases perhaps as early as
It's got to hold that dot.
even if the data remains strong then if it's having some kind of substitute effect?
Okay, it's probably a good time to cover some here. So I'm going to cover one more. I've got one left.
Want to find ourselves.
I don't expect this to be much of a huge. I didn't expect a huge drop. It's probably an okay time to get out, honestly, but I've got no reason to get out. It's just so damn fast that it makes me nervous that I'll miss it. But I'm back into that grinding area, so like it could just lift. So if I get the opportunity, yeah, I'll get out.
The obvious factors.
See, I got the star, and then it started to dip back in again, and so I thought, you know what, this is a good opportunity just to go ahead and exit.
It does complicate.
All right, so now I'm up 500 in that account. That's cool. Good with that.
Credit tightening is a different.
I thought it was up more than that. Did it?
A lot of literature on that. but
Okay.
it's
Well, I don't know.
not
Let me make sure that these other ones are not.
ICE is
All right, we're good.
uncertain. Let's say it is even for
Well, that's fine.
nonetheless, we'll be able to see.
But yeah, hopefully that made sense. Here, I'll explain that real quick. So I saw this purple.
Howard Stein with Reversion.
right? Meaning it's bearish as long as I can hold below the VPOC of where it was neutral, which was here. So the one before purple was neutral. That's the VPOC, time-based VPOC developing. Right there. We got pink bar followed by a star. See that? Whoops. Pink bar followed by star down, which is a sell signal. So short here, right into this. Took profit here, and then I saw dot. It couldn't get a triangle. That got us lower, and then dot with a star is usually bullish. And so I was ready to take profits, and I was waiting for it to pull back to give me a better price, and I got filled on this bar here. They could not break this low, and they left. Textbook. Now, had I held, it did eventually continue lower, right? So that's a good example where it's like you can be conservative and still struggle, and then you can be aggressive and still struggle. It's just the timing. It just depends on, the results are going to be the results. But I tend to make decisions too quickly. Oh, hold on. This might be a good opportunity to buy those calls. Hold on. Shit. I missed it.
I would just say that this loose is broadly consistent.
Let's wait a minute.
With how we and others.
This doesn't. We got pink, pink, white. That's pretty good.
You will have seen the beige book.
Okay, we'll buy one here. Shit.
Some of them have been tight.
I think I missed it. Fuck. Another. Oh, filled. They filled me. Did I get the right ones?
Second half of last year.
Did they fill me? They filled me. Holy shit, that was close. So I got pink, pink, and then not pink, and they continued to rise. So I assume that this entire move was capitulation.
To study the effects of those moves.
I entered way late, but they did fill me. And this is just the way that this is the way it trades during Fed. But on the bigger picture, what I was looking for was to see if this low could get trapped back in like that, which it did, and then I just wanted a better price, which I got.
Why did the committee feel it was necessary to keep moving?
Well,
A somewhat better price. I didn't get in as low as I wanted to, but I took smaller size because of it. So I'm probably holding those. I think macro-wise, this is pretty bullish. Assuming it doesn't stop out, I'm probably just going to hold those into tomorrow.
That's what we're trying to do with our.
If anything, I might add to it. If they give me another chance down there and it holds, I might actually add to them.
It's enabled us to
But
see more data.
this was the dip I got filled on, luckily.
So, we really, we
Bigger time frame had a star. This one had a star, and it's outside of the channel. And if it's bullish, like see this, it usually goes higher. Usually goes higher. So chances are we're at least getting to 250. And like I said, I think it's going to get to Monday night, Monday's high. I think we have to clean that up badly. They just needed to trap some more shorts first.
Data to accumulate to determine if this is a sufficiently restrictive stance. Does that data
So my execution wasn't great on that, but I did what I planned on doing, just not back. I could have actually gotten back where I bought it, like I had planned, and it was just so damn fast that I missed it that first time. But then they came back in, and even though I was a little bit slow, I was able to fill it. That was tough.
We've seen inflation come down, move back up 2 or 3 times since March.
So if anything, I would probably add down here.
Have a few months of coming down and come right back up. So I think you're going to want to see that, that a few months of data will persuade you that you've got this right.
A few months of data, he says, will persuade you that you've got it right. So they may not be raising next month. It may take them a couple months, he's suggesting.
You can calculate them many different ways, but one way is to look at the nominal.
That trap back in should work. You could probably buy this. Shit, I missed it.
1 year inflation, which might be 3%, so you've got 2%.
Nice, I got it. I chased, but I got it.
As the neutral rate, so policy is tight, and you see that.
I chased that mad,
Interest-sensitive
but it worked.
activities, and you also begin to see
That was a mad chase.
other activities, and if you put the credit type
Boom.
on top of that and the QT that's ongoing, I
And the calls are gonna pay. I'm still long 2.
We may not be far off, or possibly even at that level.
Oh, come on. Purple. There we go. Purple. You can probably add right here if it closes bullish. Green. Oh, I don't like that. That's not good enough. Oh, they don't care. They're going to keep raising it. Okay. Shorts are definitely hurting if they continue higher here. That was a very weak pullback.
I think we're always going to have 2% as our target. We're always going to be focusing on getting there. It's let me just say that's not what we're looking for. We're looking for inflation going down 2% over time.
All right. They stopped the other ones. That's too bad. That's too bad. I probably should have exited again. Again, a good reason to exit there when you see how it got right to the Voodoo range level. I could have, and then I know that this is not usually good enough so high on the if you look at this last impulse move, it was so big, and it was not a very big pullback. That green bar is not usually enough. You need a triangle after that. So I should have probably exited early. I just let it go because, like I said, I'm trading an eval, and I'm positive either way, and I already got out 2 of them. But the fact that I still had 2 contracts, I should have exited one of them. Even if I'm going to hold one of them, the right thing to do in that situation is to get rid of one. Oh, and there, see, this is where you want purple bar, green bar. On these big drops, not on a tiny little drop. And then you want it to be triangle. Now they're trying to bounce off that area. Let's go ahead and give this a try. Yeah. We're going to buy this.
Consistent with 2% inflation over time. So we do see some softening. We see new labor supply coming in. These are very positive developments.
It doesn't have to work, but this area should act as support if it's ready. It might not be. There we go. I got paid on the 10. Let's see if I can get 30 or maybe even 50 on it.
Fortunately, we've been able to do that so far without unemployment going up.
So you can see the more the market moves, the more opportunities I'm going to have. It's just so damn fast that it's difficult to make decisions. You just have to be a little bit more decisive. Or just let it go, which is also acceptable. But if you're gonna trade fancy, you got to be quick about it. This should immediately trap him, otherwise it's probably not ready to go higher. So this should close bullish on the 15 tick in the middle. And then it could, yeah, there we go. I got another one out. I'm gonna hold the other one if I can. That's interesting. I don't want to see that star get trapped. That'd be bad. Star killer, we call that. Star followed by X. If it continues lower, it's gonna need to dip a little bit. So they need to support this. Otherwise, I'm out. My last one. Okay, purple bar. I'm not worried about that. We need to leave this area right now. Get out of here. Go. Okay, I'm gonna see if I can get filled up at like 13,300 for my last one. I'd be pretty happy with that.
5 percentage points in 14 months.
But honestly, we might go higher than that. This might break because those Voodoo range levels should not really act as resistance if this is a real if there's a real buyer interested up there, that shouldn't be holding. So it when it's ready, it should just blow right through those. We should get like a natural. The only way this is going to end is if we get like real excess. And as far as I can see, I haven't really seen that at all. So I don't know if it's ready yet, but when it is ready, it should be a pretty explosive move up.
Without having the big increases in unemployment that have gone with many, prior.
This has to go here, otherwise I'm out.
I fully appreciate that. That would be against.
Because now we're back to that purple-pink pair, and so that has to hold. Go. It should at least take that liquidity up there. I'm only long one, but this should break out here. Otherwise, it's probably not ready. It needs to break right here. Like I said, I will happily hold this for 100 points.
The case of
just because it's fed and I've already taken a couple stops I probably shouldn't have, and I'm gonna, if it works, it works. If it doesn't, it doesn't. Uh-oh. That's not what you want. That looks like a failure. They need to hold this.
In March, that wage growth was still well above levels that would be consistent with 2% inflation. Do you see see that as well, and could you kind of explain, how you...
Go. Yeah, I might not be ready.
So we look at a range of wage measures, and then that's a nominal, and so you assume wages should be equal to productivity increases.
It doesn't look bearish, but like it just doesn't look ready.
You can look
See
at,
that?
The employment compensation index average.
Oh, okay. Let's exit we'll exit the runner at break even or so.
Basically, those 4
Give it a minute. It might just trap back in and go again, right? Like that could happen. I'm up 1,400 in the account, so.
Period of time for that to be consistent with 2% inflation. They can deviate. Corporate margins can go up and down, and there is a feature of long expansions where they do go down, where labor gets a bigger share toward later in a recession.
Yeah, wasn't ready. See that? So when the dot doesn't produce an extension, there's a problem because there's sellers in that bar, and yet they're letting them out. So it's not ready yet. I'm not saying it's bearish, but here, this is what I was talking about before. So on the actual chart, to get lower than this, what we need to do is trap some buyers and then go lower, right? We have not created any excess above this high. See that? It's a poor high. So chances are that's eventually going to break. I don't know if it's going to break before this breaks, but there's a good chance it will, right? Everything's bullish, and the bulls are having an easier time than the bears. Every time they go down, they're finding buyers underneath swing lows, right? So trap, and then this trap, right? So now the next trap would be under this. Could it go underneath and then trap again? Absolutely. It could also trap under. Oops, I think I moved those. It could also trap below this. So if it's not ready yet, it may go down and create more excess down here. But there's already excess here. See that? It got below all these swing lows and then ripped. This does not look like real excess to me. This looked like it ran into the voodoo range level and this old resistance, and shorter time frame traders attacked it, and there were just no buyers to support the buy move, so it came all the way back down. So it's acting like it's mean reverting back and forth through this area, which is totally tradable, but like not necessarily super bullish. Let me turn this down because I'm not really listening anymore. So yeah, I just want to know when he's done. He's probably close to being finished here, but.
Back to normal, so that we don't have the long waits and the shortages and that kind of thing. I think you will see.
But there's no reason to think it's bearish. It's just a matter of where do I buy it, and where is the line in the sand where I now know that it's not bullish anymore. But it's basically looks like indecision. But on the higher time frame, we're developing volume higher and higher, with the exception of this day here. Right? So this day here is acting as resistance, but as soon as they realize they can't push any lower and there's only buyers and no sellers down there, the only choice is going to be to go take the liquidity that's sitting up here, which is what I expected to happen yesterday, since Monday. As soon as I saw this, I was like, yeah, this right here. I was like, that is a shitty low, and it might create a short-term day drop or two, but it's eventually going to get cleaned up. And I assumed it would be right away. It doesn't have to be. It can go down before it goes up. You never know. But here, they're trying to go down, and they can't get it to go lower. So they're going to need some new information to break and hold below this low. And we haven't even approached Tuesday's low. Not even close, right? So anybody who was short yesterday's lows is swearing and cursing and getting margin called if they're trading on leverage. So there's no reason to be short unless you're looking at a very, very small time frame, like I was doing earlier. Now that short that I took, oh man, this came back. I wasn't watching. So yeah, they did. I was right to exit here, but they did the same setup where it's blue, and then aggressive bar, triangle up, rip. I'm going to show you. That's another setup I could share. If people want to see that, let me know. I'll show you how that works. But those blue outline bars and the yellow outline bars are very powerful when you're trading against a trend, because it's a sign that it's oversold or overbought in momentum, in volume momentum, which doesn't matter if you're trending in that direction. But if you're not trending in that direction, it's very vulnerable to get trapped. Now here, I thought they were bullish, right? So if they do anything other than a purple bar under this, that high momentum volume is trapped. And then you can see how they pushed higher in price, but momentum went away. That was the sign that something was wrong. Purple, purple. They need to hold that right here.
Not so quickly.
Blue.
Take some time. And in that world, if that forecast
Okay, right there. They have to immediately reject this. Otherwise, it's going lower for a bit. So that blue guy needs to get trapped.
markets have been
We need to get above this. There we go. Star. Now get above this. No.
we factor that in.
No.
Of course,
All right. Trading lower than blue is bearish,
that inflation moves down.
especially after a bull bar. That's
Non-housing starts,
problematic on this time frame. Now on the higher time frame, it's just back to support.
and it's quite stable, and so we think.
So this is a trap back in on a higher time frame if this closes bullish.
And labor market
But with this blue bar here
to begin to see progress.
that we rejected off of,
In that world,
that's usually going to be resistance. Note VPOC, developing VPOC's way up here. So this could be pretty bearish. There we go. Blue, blue, bearish. This guy needs to get trapped or it's very bearish. There we go. Trapped him. Now we need triangle up and we need to break this and then it'll go higher. We're once again right at a voodoo range level and they're responding to it. So this is still intraday trading. It's just intraday levels getting traded back and forth basically.
Sure. So we looked at that very carefully.
Okay, there it goes.
And it's
So any dip,
it's really
now that we've
contributing. We don't-
now, technically, we have not broken above this or this. So it might, if it's bearish, this dot will hold as resistance. What I want to see is I want to see this VPOC, wherever that went. I want to see the VPOC here shift down and not see selling. That would be the real confirmation that we might actually have found a low. Because remember, these voodoo range levels are just intraday levels. It's a sign that intraday traders and algos are trying to support a move because we've moved 41.5 points lower or whatever. It's just like a natural rotation. But it's not going to act as a brick wall. If some big seller comes in, they'll let those guys, those mean reversion traders will let it go. Okay, trap back in. That should work if it's bullish. I'm not going to take it because I don't see bullish, right? We got purple. We haven't gone beyond the VPOC. But if it's bullish, this will work. Nope, they're trying to hold the voodoo range level. I don't know if it's going to work or not. My guess would be no. Yeah, so they break below it. Okay, so again, it immediately turns blue. And if they trade below that and they can't break back above it, it's bearish. Okay, that's good. This is what we saw before. Star and dot after the blue. And there it goes. See how it got beyond it? Oh, it didn't. The VPOC didn't quite reach it. It didn't do it yet. It did on a pink bar. This has to close bullish.
I would just say it's.
Come on.
I don't really think we
I'm
should-
still in calls, so
We're talking about a world in which the U.S. doesn't pay its bills. It's just
there we go.
a thing.
Okay, bullish. Dot. You can probably buy it.
We
I prefer a dip because we have range that's so big, but that's technically bullish now.
the economy and the financial system and our reputation globally
Ooh, gross.
from damage that
This should not be triangle down, otherwise they might. Oh, no triangle. There we go. So we want to see a trap back in or something. Purple bar star, something bullish here. They need to actually respond. Oh, is he leaving? No, he's not leaving yet. This needs to be bullish. Otherwise, I don't know. Because now, has it trapped back in yet? Yeah, that needs to work. Oh, VPOC is so high. I don't think it will. I don't think that's going to hold. Look at that. I did not expect that. Okay, so they're going for that. They're going for that low. Right? The overnight Asian low. That's what they're hitting. They're trying for. Okay, double divergence, the background and the dot, and high volume. And it's green. And we're way below the okay, when that doesn't work, when this fails, we know it's bearish, right? We talked about that in the beginning of the video. So those if you were in a high leveraged long position, you want to start looking for opportunities to get out now because that should not happen if it's bullish. These green bars underneath the channel should not be bulldozed like that. And see how it's blue, blue, bearish,
and identify
blue. They need to break back above those, all of them, to have any chance of recovering. So the further we go lower from there, the less chance we have of recovering that high. And the more I want to be out of those calls. But thankfully I didn't take very big size, so I thought I might add to them. But that is not a good look. Okay, they need VPOC to shift down for this to be have any chance of really succeeding. Right now, this is just retracements that are going to get sold. Okay, they did retake it, and look, they did trade under that low. That Asian low got tested. Oh, my internet's lagging. So that Asian low got tested below, and they put they put some excess below it. So I might have gotten unnecessarily nervous looking at the smaller time frame, but when I saw them go underneath this channel and turn blue and not immediately take it back, that's what you see when it's bearish. So, and then like I said, the green outside of the channel get broken. That's also what you see when it's bearish. So they need to hold that low. Okay, I'm getting ready to exit these calls because I don't really feel like taking a big loss. I'm down small, $34 per contract on them, but I don't. If they take this low out with aggression, then yeah, then I don't want to. Oh shit. Okay, so yeah, if they take that out and they increase aggression below overnight low, I'll just be done with it for now and just assume that there's something I don't know that's going on here. So they need to recover this immediately. Okay, divergence, speed bar, green bar. They're trapping this blue one. That's got some potential. Like they're not responding. See that? They gotta lift it. There's no aggression to the downside down here. It's still possibly a bounce. But this needs to work. Yeah, I could have added there, but it's potentially so fast that I didn't want to. That would have been a good add though, because it came so close to stopping out. But note this voodoo range level is still kind of acting as support. So most of this is intraday. These are still intraday traders acting as support and resistance all day. We've seen this, right? We've seen voodoo range levels acting as resistance, voodoo range levels acting as support. This is not a higher time frame reversal. These are intraday traders stealing stops from retail. So, yeah, I probably should have added there. Like I said, if this would have gotten crushed, I would have exited the calls. But when it doesn't, you can probably just add. I guess it's not too late to add. Okay, let's see. Let's do this.
The place to start is the statutory role, which is quite unusual. Vice Chair.
So I might regret this, but I'm going to add one. The moment they get another bullish bar. Hold on. They need a bull bar though, because if they take out that low, like and it's hard, like I'm not gonna mess with it. Oh shit! I don't like that one. I took it anyway. That's not what you want. You don't want the green. Okay, well I might have made a mistake here. Filled. I might immediately have to sell it. That happens. But I'm basically campaigning the level. I'm prepared to sell this if it does not go my way. Yeah, see this. It needs to lift like right here. If intraday traders are still supporting this, it won't crush through this green zone. Okay, that's good, but it's got to go somewhere. Potential. Like I said, the price was right, and I was down $34 on the calls, so it's like, hey, why not add? If it works, it's a good price. If it doesn't, I'm out for like a $50 loss. No big deal.
I think that's the way it's supposed to work, and that's appropriate. I believe that's what the law requires.
Okay, testing the VR level. Yeah, if they take out this green and it's not just purple bars, but like real selling down there, looks like they're gonna take it. Yeah, they gotta hold this. It's a naked volume point of control from a previous day. Yesterday. Yesterday? No, I think it's a different day. I don't know. I don't have it marked what day it is, but a previous day's point of control. Yeah, it's another green bar with a dot. That's not usually good enough on the first try. So now they need to support this area. Buyers need to show up here. Anywhere in this range. That's good. That's good. So see how we've gotten above some pink bars? VPOC's above pink bars. That's a good sign. On this time frame, things are turning around. But look, the higher time frame, we're way under the channel, and we have not seen any aggression. No stars, no green bars, no dots. It just, they haven't had any follow through. This one got a star, a dot, and a speed bar. So the 24 tick, it's got the potential to turn around. It's okay if it tests below it, but they have to support it. Okay, it still looks like a low on this lower time frame, faster time frame. Still looks like they're trying to develop a low. They're accumulating, but again, very small time frame, right? On a higher time frame, the location makes sense. It's a Voodoo range level. We tested below it. We found buyers. We're back into this higher volume area from yesterday. It's a sensible place to get long if you are okay holding for like a day, you know, or longer. And it's not a horrible place to get long on futures either. And then just make sure you take profits into this. But I already hit my target on futures, so I'm not going to mess with it. Not in the last hour on Fed day. Like, I don't feel like going red. I don't want to be up $1,400 and go red on freaking last hour of Fed day. No thanks. I totally agree, Nathan. Those are great. Yeah, those ads are it's what professional traders do. They know their sentiment, they know their location, and they're willing to put a little bit on the line to win a lot. Because really, that doesn't have to work very often to be profitable, right? I was risking like an extra $20, literally $20 to make like $200 when it works. Like, why not do it? Other than just not wanting to look like a dumbass and buying and then immediately having to sell again. But yeah, I think it's a professional way to trade. My coach does it all the time. Yeah, exactly. It's why people buy there, right? Yep, because they expect that I'm going to do that. That's a nice little pullback. See the green pullback green? That should hold. This is a previous low of day from last week. This should go. I went triangle up, and I could probably buy it again. I hate that I got a pink bar back here because that's going to attract attention. But this should actually lift. Trying to decide what to do if it doesn't. Is there any reason to think that that's bearish? Yeah, see, they're going to come back and re-auction this pink bar. Makes sense. There's no volume here. It's just sellers pulling their order, and then they finally got a chance to get back to it. So they're like, oh, let's just push through this. Yeah, that does not surprise me. Pink, purple, whoever owns this level is going to be in control. These pink and purple bars, the no demand, no supply bars, they're going to act as a pivot. When they line up like that, it's usually a pivot. As long as we leave to the upside, I'm good. But if we take out the low now, I'll just exit those calls and be like, hey, I risked $20 to make 200, no big deal if it doesn't work. You know, might look stupid, but it's smart. It's okay if it comes down, tests below, and runs. That's fine. Levels are not brick walls. They're zones. Okay, we got the star down here on the higher time frame. Tested below and now is broken above with the VPOC above it. So as long as this low gets defended, we're fine on a higher time frame. Okay, there goes Powell. He's done. That might be why they're selling. So if someone was waiting for him to say something more and he doesn't say it, they might just goose it. Okay, purple bars below it, no big deal. But a big seller underneath this green, and I'm just gonna figure I'm wrong. Obviously, sometimes you're not, but let me make sure I've got this ready to sell in case it just dumps. No. Sell. Come on now. Sell QQQ. Okay, I see. It's because it's at a profit. I was like, why is it green? Okay. So we'll see. This is not the price action I expected. I'll be honest. This is not the price action I expected. They are still acting like this area is something that they need to re-auction over and over again. You'd think they'd leave the area, but they're still reacting as if like no one's interested down here. The problem is if sellers are suddenly interested, then all the buyers are going to give up. But nope, sellers are not interested yet. Nobody's really showing up. So, and yeah, buyers are pulling orders. So if they show up here, yeah, they might get me. Low volume. The volume is divergent here if they don't continue lower. So if we get a green bar here, it's good. But other than that, I'm going to assume that they just need lower, which again is a surprise, but that's how it goes. Okay, test below it. I need to put a VPOC below it, yellow line below it on a bearish bar, and I'll be satisfied that I gave it a good try and it just didn't work. So it looks like we're going to need one more bar unless they shift volume lower. Okay, this one needs to be bullish, otherwise I'm done with it. It's probably going to act as resistance and kick me out. But that dot is potentially going to get trapped if there's a buyer here. But if there was a buyer here, why hasn't he shown up already? I don't know. So, oh. And magically he shows up. Should be a green bar if it closes bullish. That would be good. Then we could do pink, then white, and then it can lift. Otherwise, I'm done with it. There we go. Green. Now I want pink with a triangle, and then white, and then we are good. Pink with a triangle. Now give me a white bar. Please. It needs to close bullish. Come on. There we go. All right, we should be good. Could technically add again. I won't. That's very, very, very good on a higher time frame. Pink, pink, white is a really good pattern. Now they can test below this, and as long as they support this, it's still a buy. It means I gotta adjust my stop a little bit, but that's the nice thing about calls is that I'm not leveraged heavily. You know, I mean, in fact, it's a very small loss if I lose. Like it's like a $70 loss if I lose, basically now, but at least a $200 win if it works. And I might be able to take one of the trades. Oh wait, let me see if I can take one of them today or not. I think I should probably hold them. I think if it works, I should probably hold them. I hate the idea of holding them overnight, but I believe that's the right move. Because again, if this is support and they can't get and hold under it, the obvious target is back up here. So while I hate being long overnight, it's just not bearish if they can't get under this during the regular trading hours. It's just not. And yeah, I might end up losing with like an overnight like move or something like that, but it literally acted exactly how I asked it to, and I had an amazing, and like my average is like perfect. Like I couldn't have done that better execution wise. So to not get paid like when it works is just a waste. You know, I mean, it would suck if it stopped now because I could potentially lose $200 rather than like 70. But there's a good chance that's exactly what I asked for it to do, and it did it. And so to like chicken out of it now is like, well, why the hell did you even do it then? So I think the answer is you assume you're right until you're proven wrong now. And accept that means taking a little bit more risk than I would have been willing to take intraday. But the only reason I was even thinking about cutting that loose is because I wanted it to do this, and if it didn't do that, I figured it wasn't worth it. Well, it did it. It did exactly what I wanted it to do. Tested below, did a pink bar, and a white bar. I mean, yeah, if it fails now, then I was just wrong. But the times I'm right, this goes back over Monday's high within the next few days. So we shall see. I'm just really surprised that the reaction is so muted. We did not trade over Monday's or over Tuesday's high or over Tuesday's low. I can't remember the last time a Fed day was an inside day. That's just weird. Right? That's just weird. So, I don't know. Oh, interesting. I wasn't watching TQQQ. Nice. That's cool. No, I definitely don't either. I agree. I think they're just going to take the opportunity to lift it. ES didn't get below the low of yesterday either. I think this is profit taking, and then we're probably going to see people pile into it. But I mean, I could be wrong. But I think there were a lot of people expecting bearish comments, and it panned out exactly how everyone expected it to. So unless everybody was leveraged long and like didn't hear that we were getting interest rates cuts and are going to sell, I don't know why anyone would suddenly get scared here. Yeah, right. Yep, I agree. I'm pretty happy with how I traded. It wasn't like I said, I got a little bit lucky, but then made some mistakes with well, they weren't really mistakes. They were just I was a little bit aggressive with my runners, considering the environment. I could have made more if I exited the runners quicker rather than like holding it for the full stop, knowing that during Fed we're going to have these wide ranges and that'd be pretty normal. So like the likelihood that full stop gets hit is actually pretty high. So I could have adjusted there, but and then I made a judgment call pre-Fed not to take a trade that set up and worked well, but I did so because I was green on the day and didn't feel like going into post-Fed decision red. So I think I had logic for what I did. Oops, I wasn't watching this. And oh boy, and yeah, that's what matters. Is like I pretty much traded my plan, and the results were okay. So I'll take it. Not blowing up on a Fed day is generally a good thing. I'll give you that. All right, here we come into the low. Let's see what they do. Testing below it. They should retrace relatively quickly if I'm right. They may need to hit that low from yesterday on ES. It's so close. If you look at ES, they're so close to yesterday's low now that might be a short-term target that they're gonna try to trap sellers in. I wasn't watching that. I had it on another screen, but I wasn't thinking about the fact that we're so close there because we're pretty far from it still on NQ. We've got a ways to go. No, it's pretty much the same. It's pretty close. Pretty close. So that might get tested. We might go to 13,106, I guess. But like I said, I got what I wanted. So it's kind of hard to exit prematurely now. So this should get supported. On this higher time frame, pink, white is usually pretty good. There should be buyers down here. I will let it breathe a little bit because I got what I asked for. Heavy selling here would be a surprise. I think they're probably going for that low. I guess it's possible that everybody's expecting that, but let's see. Looks like a trap to me. I don't know. We'll see. Could be wrong. Let's see. I wouldn't mind one big capitulation sell, I guess, but I just don't. It's so hard to read when like this like grinding lower is so strange. Like usually when it drops fast and heavy. And this like buy, and then sell, drip, buy, drip. Like that's It's weird price action. Not what I expected after that decision and that press conference. I didn't hear or see anything, but that's the thing with macro stuff. Like that might work on like a weekly chart, but it doesn't necessarily mean what they're going to do today. So all they might care about today is they want to know whether or not there are buyers below the low. That might be enough to get them to not buy until it touches that, you know? Everyone could be bullish, but nobody's willing to buy until they know there's a buyer waiting below there. It might be that simple. Very easy to overthink these things. So they have 30 minutes, basically, to defend this. And I will give them the space and the time. I'm not going to add any more, though. Because that move should have worked. This should have lifted. Sometimes you need one more push. But all they have to do now is retake this white bar. Here, I'll mark it. It's the orange, basically. They have to retake this bar. So let's say 13,170,150. If we get back above that, it should squeeze. But I'm gonna give them time. But that rotation looked very bullish. It's just kind of weird that they just let it go. But I wouldn't be surprised they're doing so to trap. Would not be the first time I saw that. Okay, right to the voodoo range level again. So intraday traders, like mean reversion algos and stuff are still the only ones really reacting. It's just low participation. It's very strange. For a Fed day, it's just weird. Like, where is everybody? My only thought is they're waiting for that low to get taken out. Oh, it did. NQ just took it out. So NQ took out the low. So now we should expect a pretty big bounce, you'd think. But ES has not taken out the low. So if they do bounce here, it's extremely bullish. Purple, then pink. That would be a nice pivot. Yeah, so just everyone just pulling orders from the order book. Yeah. Nobody interested in doing business down here. Whoever can get some volume developed here is going to win this zone. All buyers have to do is bring it back up through 13,170,150. And sellers are not defending. Okay, now we're to that previous low. They might defend that. I can't believe that VPOC is so high. Developing VPOC is way up here. Yeah. Way up here. For all this drop, all of this was low volume. So this is the area we should really be fighting over. You can see we got purple here, so I mean it's not bullish, but the location's right for someone to decide to give it a shot. But I'm not going to take futures trades. I'm not going to trade with leverage down here to the bull side. But I'm okay doing it with calls because, like I said, worst case scenario, they go to zero, you know, and like I think I at least have 1-to-1 on them paying out by tomorrow. Here we go. Smaller time frame, purple bar, star, green bar, but again, like bearish on the higher time frame, so pretty hard to take a futures trade there. I don't know if I have risk reward, even though the location's right. Now, like I said, with calls, totally cool. But with futures, I have to be out of those by the close. So if they don't run it, it's gonna stop every time it doesn't run it. And then the times it does run it, it may not really do it until after Apple, you know, because we have Apple earnings after hours. So we may not actually see the move until after hours. And that's the thing. The market may still be on pause. And since everything that the since everything from the Fed was as expected, we may be reacting to these voodoo range levels right now because it's not anything new. Everybody was already positioned for that. They all knew that either they're long or short in this area, but no one's really willing to commit more money going short or long in this area. So we need more information, which will probably come from Apple earnings and the economic releases coming out Thursday and Friday. So it may not be able to move from this area today, which is like honestly the worst case scenario for me from a trader's point of view, but not the worst case scenario for like a investor or swing trader. But for a day trader, like the last thing I want is to stay in this zone. I just want to be the hell out of here. I don't care which direction we go from that point of view. But I think that macro wise, until we have more information, there's really no reason to think that we're going to be selling hard. And I have to assume that some people were selling before this out of fear that something could have gone wrong. So you'd think that those guys would have to cover and wouldn't want to risk having more dovish situations or bullish situations coming out and further pushing them out, especially when they have an opportunity to get out here at yesterday's low. You'd think they'd take it, which is why I'm buying. But perhaps there's just not enough participants interested in buying this here that they'll let it could just drip all day, right? For the rest of the half an hour. It could just bleed, basically, if there's nobody interested in, if everybody who wanted to be a buyer is already in, it can just bleed. And then as soon as Apple comes out, it'll either gap up or gap down. So if that sounds like a gamble to you, then make sure you're not risking more than you're willing to lose. Because I kind of agree. It is sort of a gamble. But yeah, from my point of view, I saw everything I wanted to see. I got a really good price on the calls. And when I'm right, I think I make 1-to-1 or more. So I'm willing to turn it into a swing trade and just kind of see what happens. But I can understand if others don't want to do that. But like I said, I remember I already banked on the calls I sold before the Fed reported, right? I already banked on those. So keep in mind that I'm already up on the day, and that helps. So worst case scenario, I still win that trade. The only thing I have at risk is this trade. So that should be reiterated. Now, I would lose more on this trade than I made on the other one, which would suck. But the reason I exited those ones early is because I didn't see the opportunity to break those highs anymore after we made that big lift pre-Fed. And I think that was a good decision. And so what I'm basically doing here is just buying that position back at a lower price, basically. That's the way I see it. I took profit on it, and I just decreased risk by getting into it lower and taking profit on it. I've already decreased my risk by like a third. So I'm more willing to hold it. Now, like I said, I really wanted to see them bounce it out of here. It's not too late, but I really need them to take 13,170, 150 back. And if they don't, it could bleed for the entire half an hour. Looks like ES is approaching its low from yesterday, with 19 minutes left to go. You have to assume they're going to take it. But like I said, if they don't, it's extremely bullish for the moment. CL. What the hell is going on with oil? What? CL is dying. Okay, I wasn't watching that, but accidentally looked at it. Look at that. What the hell is going on here? Low volume. So yesterday was a big volume drop, and then this was a low volume drop. I kind of want to buy that, I'll be honest. Not right now, but that might be approaching an area where I'd be willing to buy. Ah, interesting. Hmm. Yeah, I'm thinking this is probably the last hike in the cycle, but that doesn't mean it's bullish, right? Just because it's the last hike, that's not usually how people aren't looking to buy just because we aren't raising interest rates. But the reason it would go up is if people think they might cut. And, that still could happen. People could believe that we're going to cut. I don't actually think we're going to cut, but people could believe it. Policy decision was unanimous, interestingly. But all we need is more, banks to fail or whatever, and they're going to suddenly say, you know what, maybe we should just dial this back a bit. So, but I'm just wondering if CL is dumping like this, could it actually be a good time to buy it? See, look, with CL, what's going on here on the daily chart, if you look, we gapped up, filled the gap, and kept going, which is usually pretty bearish, right? But look how, if you measure this, it's coming right back to the 78.6 or maybe the 80% point, and it's bouncing off a voodoo range level. I kind of want to buy that in my long-term account. And then if it breaks this low, you're done with it. I don't know how many opportunities. I think I might do it. I can do it with Oil K, I guess. Is it ETF? I think that's a good idea. I really do. I'm gonna go ahead and get a little bit. And then I might buy some more. I'm gonna buy some Oil K. It's just an ETF tracking the oil. I'm gonna see if I can get filled. I really don't want to. I'm not gonna market buy it, but let me just double check here. Am I totally crazy on this to start a position here? I don't think so. It makes sense to me. All right. So it's not a big position, but we'll see. We'll see. I could be totally wrong, and I can always hedge it, but I can't think of the last time I saw that kind of opportunity in oil. Now, if you look, the energy companies, the energy ETF, right? This is the leveraged one, ERX. It is in the period of a pullback, right? But you can see the indicators are all going sideways now. And then if you do fixed range volume from the point where we started to pull back, you can see we tried to break out of it right away. We just weren't ready. So it could come all the way down here, right? It's not necessarily ready to lift from this perspective. And then we're underneath this bigger Hull MA. And you can see that when we hold that Hull MA, it's very hard to get a pullback, right? But when we get under it, it generally retraces. See, here's the last one that did this. This is pretty classic. So see how they try to break over it, they fail, they get all the way to the other side, they trap, and that occurs when we get underneath that Hull MA with the dots. And then when it's ready, it bounces off the bottom one, goes through the VPOC, and breaks through the Halame, right? And then like you can see the same thing here, most likely. This is kind of opposite, but here we got under the Halame, we lifted, we couldn't make a new high, got under the Halame, broke down, got under the VPOC, tried to come back up, rejected off of volume area high, came back to VPOC, right? The natural thing to do would be to come back to this volume area low and bounce, right? And then look how the Halame is falling into the value area. But from my point of view, if I look at the indicators here, they don't look super bearish. So it's also, and because it's been bullish for so long. So in other words, that's the weekly chart, right? On the daily chart, this same zone, to me, I see that they tried to bounce off an anomaly. They ran into the value area high, and everybody's going to assume the value area low is next, and they might be right. But look at this. Look at these indicators. This is clearly bullish divergence. So what you could do is you could wait to see if I get one positive day on oil or energy. It's potentially going to rip out of here because a lot of times it'll go out, it'll come back to the VPOC, and it'll bounce, right? And they tried to do that and rolled over, so everyone's like, oh, it's definitely dead. And it could be going under this low. It totally could. But if it turns here, it's got momentum now, and so now it can lift because you can see how far we have to go now on these indicators. Does that make sense? And this yellow one is the percent R. It's clearly divergent. So I mean, it's not necessarily a clear long, but it's the first opportunity I've seen to start looking at energy. It's just a question of like whether or not we get that positive day. The way to do it conservatively is to wait for a positive day on energy or oil and then buy it. But like I said, I made a very small buy in my long-term account, my core that I only touch every couple of months, right? Like it's a Roth IRA account that I've been waiting to get active in oil. I've wanted it since this lift. And I was like, hey, it was a zone that we were stuck in for a long time, right? And we got all the way to the top of that zone. So if we can go back to the bottom of that zone, I want to be long because I think it's going to come back up again. It did a 80% retracement as of today. So my risk is off this low, but the reward is that it goes actually higher than this. So from that perspective, hopefully it makes sense. And then, like I said, if it's bouncing off of intraday VPOC or Voodoo range levels, that would be the first sign that it might be trying to make a bounce, and it did that here. Bounce, right? But then it's rejecting off of this one. So you can see here it's clearly bearish. They tried to bounce off it and got nothing out of it. Here they actually got the bullish candle, but it looks like they're going to close lower. So it might not be ready, but I'm willing to start a position here in case it rips. But if it goes lower than this, you could technically campaign this whole area here. Anything down here you could buy, and then just put the stop, down here somewhere, more or less. But like I said, I'm not doing it with futures. I'm doing it with the ETF, so I can do like basically 30 shares at a time. Like I'm talking small, right? 30 shares with a plan of getting like 500 if it does what I want eventually. But in case it doesn't reach that point, I have a small position already made. And that's just usually how I do it with the higher time frame. I make a decision early on that I want to get into something, and I pick out an area, and then I just need a sign that something's slowing down. And like this move just does not look convincing to me. Like yesterday did, but to hold overnight and then get a capitulation move like this with like low volume, big volume, right? Like it could go lower, but I think it's almost done. I really do. I think we're almost there. Could be wrong. It might not bounce at all, but I think if it's going to bounce, it's probably going to be almost done. Now, ES has not breached its low. and we're already seeing a bottoming formation. See how this is starting? We got double divergence, lifted above. I'm not going to buy futures into the close, but if I wasn't long calls here, I'd be thinking like, wow, I really don't want to be short. Clearly, the market does not want to stay short. Otherwise, they wouldn't be accumulating like this. And you can see it on the higher time frame too. See how we got green bar? They try to lift, and then it gets under, and it traps back in with a star. So this star right here, if that creates any lift, it's neutral to bullish. The green bar here, if it creates any lift, it's neutral to bullish. We do need a triangle up or at least some kind of bar to go higher to confirm that. But getting outside of this channel and getting some aggressive traders followed by follow through would be a sign that nobody wants to be short overnight. And that's good enough for me. So let's see if they can pull it off. And then I'll close it out. This has been going 5 hours. Holy shit. Sorry, guys. I didn't realize this got so long. That's okay. Let's see where we close it. You guys, you can always watch this on 3 times speed or whatever. We did a lot of waiting, sitting around. Hopefully y'all learned something, though. But if I've been going for 5 hours, I might as well go for another 10 minutes. Finish what we started. Let's see. I mean, I could be making a total fool of myself, and Apple could get destroyed at earnings, and I could wake up to these calls being 0. And remember, I'd still lose less than that because I took profit on the earlier ones. I exited the earlier ones, right? So my risk here is low, but I feel if there are people who are short and it doesn't continue lower, yesterday's Tuesdays and even Monday's highs are probably going to get broken. So is it a little bit of a gamble? Yeah, it's not a for sure thing, obviously, but there was nothing in the Fed stuff that suggested to me that anything was going to change to be bearish. The only thing that was missing is he didn't promise any cuts and didn't promise that we were done. But I think he hinted at it as best he could without saying it, that while it was unanimous to everybody that they raised today, I don't think it'll be unanimous that next month we raise. And once people realize that this is as bad as it gets as far as interest rates go, we may see some more pressure on the economy, and we may even get a recession. But I think people are going to realize that, they don't want to be short, basically, is what I'm guessing. I could be wrong. But if tomorrow we wake up and Apple, perform well, and they're thinking, well, it might be a recession, but it's probably not going to be a recession tomorrow. I think the result is people won't want to be short right now. Might they be short in a month? Yeah, absolutely. I might be short in a month. But I don't think anyone wants to stay short while we wait for further decisions when there's a relatively high chance that they're not going to raise interest rates again. I think the time to be short is probably ahead of us, not now. Now, if like I said, if Apple totally gets sold 5%, well, then everybody is right, and it's time to be short. Okay, ES just traded underneath the low of yesterday. Let's see if we get a response to that. Note NQ is holding this low, and ES is showing some weakness. But as soon as they tested under it, a buyer showed up. This is what we should expect. They're trying to trap sellers underneath that low. That's great. That's fine. I'd prefer they go just a little bit further, actually, but they only went, what is a point? A tick. They went a tick underneath. They got to push further than that. They shouldn't have. That was awfully premature. Nobody wanted to miss that low. The moment it got taken out, everyone's like, bye, 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 bye. That makes me a little nervous. I would like to see some excess down there. Let them believe that they got something out of it. What that looked like is sellers taking profits. So that was not what I wanted to happen. I wanted them to bleed it, to rip through it, and then give the big hammer candle. They got under it by 1 point, and someone came in and bought a ton of contracts. That guy's probably going to lose. Could be wrong. But usually when this trap works, they believe they're right for a moment. And it doesn't last long. Okay, so one more dip. Nice big flush. And then big rip to the upside is what we need. It would suck to close at the lows. But all we have to do is retake that 13,170, and they're all trapped. So I'm just going to let it. I'm going to let Apple do its thing and live with the consequences tomorrow at this point. I have a good entry. Traded well today. It's a small position. Just like it's kind of the same thing as the oil trade, only on a smaller time frame. The position makes sense to me. It might not be right, but if it works well. And when it doesn't work, the risk is small. So do that enough and you make money. Like, do I need to be involved in it? Probably not. Maybe the better decision is just to conservatively be patient, like I am with the futures trades. But in some ways, I kind of feel like the equity and option trading, when I'm swinging them, you need to take some chance here and there. You need to, with this market, you're not going to get a lot of opportunities. There hasn't been a lot of volatility. There really hasn't been a trend. So it's either don't trade or get the best possible position you can in the best direction you can and just see what happens. And do it with small enough size that you can make mistakes 20 times in a row and still recover without having to risk your entire account. ES is risking closing at the low. They are not letting them flush. They need to let them go. Let them flush it. And ES and NQ are just trying to hold this arbitrary level. Oh, I see, because NQ is under yesterday's low and ES is above yesterday's low. So NQ is trying to recover, and as a result, ES is unable to capitulate. Don't like that. I want them to flush at this point, because there's only 1 minute left, so just let them flush it out and trap as many shorts as we can. Potentially. So we just want sell, and then we want Apple to save the market and gap higher. That's what I'm basically going for now. There we go. Okay. Yes. Looks like it wants a new low. Buyers pulling orders. Nope. They're back. They won't let them go. They're not letting them go. Five seconds. Does not look like the sellers have enough power to take that low again. Okay. So at the settlement, so that the close, ES was above the low, NQ was below the low. Clearly, now that everyone's out of it, they're going to take that low and flush it. That seemed pretty obvious. NQ is below the low of the day. Sorry, ES is below the low of the day as well, as is NQ is approaching it. We want a nice big flush. It might not happen until Apple. I don't think anyone really wants to make any decisions here. No, Apple doesn't usually come out for another 30 minutes or so. I'm pretty sure it's Apple today. Am I wrong about that? Is it not today? I thought it was Apple. I just realized I'm not totally sure about that. Who is today? Well, whoever it is. Okay. Here comes some results. But like I said, Apple usually doesn't come out for a bit. All right. Well, I'm not going to sit around and wait for it. We'll just have to see how it goes. This has been long enough anyway. Hopefully you guys learned something, like I said. Or it was educational and entertaining. If you want to get a hold of me, that's how you do it. Email my coach Simon to talk about the algo or to join the room.